Good morning. Morning, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's the first day of November. Hope you didn't eat too much candy. Futures are on the move after dipping more than 20 handles at one point. We have a Treasury refunding today. Let me see what the news is here. Okay, not seeing anything on that.
The relief that comes over people once they know they've got a guide to help them through. I definitely feel privileged to be in that.
All right, so Train is seeing high relative volume. Let's see. Tesla volume picking up pre-market.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Higgs. Catch me on Fast Market. Weekdays at noon.
High relative volume.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Missed out on today's market headlines? Get caught up and catch the wrap at schwabnetwork.com. Available anytime, anywhere, on any device for free.
All right, we've got 8 minutes to go for the opening bell. I just want to bring up high relative volume stocks this morning.
Equities have managed to firm up, and we've got a lot coming over the next two and a half sessions. We've got the Fed, we've got the economy, and we've got our Lloyd Delwish, investment strategist at High Mount Research, joins us. Let's start with the checklist of bull or bear market behavior. Willie, where do we stand?
Yeah, so we've talked about this in the past. We've been split between the bear market indicators from a breadth.
All right, these are pre-market gainers. Keep an eye on these stocks. They're showing high relative volume to start the day. That could mean they're going to be in play.
So we got 6 indicators. 4 of them are inconsistent with bull market behavior. So we've got the ACWI long-term trend, and we've got the S&P 500 200-day moving average rising. But even that, I mean, the S&P 500 is below its 200-day average. So there's kind of a bit of a watch there as well.
So there is disappointment, I guess, in the labeling of our rally the last year by bulls that tried to say it was a fresh new start.
All right.
Kick off according to your analysis.
Yeah, we had opportunities.
Then roll over.
Yeah. I mean, we had opportunities that bull market couldn't launch, and so now it's rolling over. Some of the.
Okay, these stocks are showing high relative volume. Okay. All right, let's look at some of these names real quick to see what's in play. Tesla. Tesla's moving higher, volume picking up. Caesars is picking up. All right, let's see what Caesars looks like. Okay, Caesars. CZR.
Check. What are they hanging their hat on here? Apple comes in and saves the day,
Okay, Caesars up pre-market. Check Caesars. with almost 2 times regular volume.
Any moment now, start to see the bid come back into stocks. Maybe if bond yields stop this relentless rise, then maybe you can get that bid. I'm a little bit skeptical of that, given that the weakness we're seeing beneath the surface. So I think it's, if you're going to be bullish.
All right, Caesars coming off the low. Not really happy with that. CCJ, there was some conversation about CCJ yesterday. CCJ, CCJ 4.72 times, probably in play. Day 2 follow through.
Sure. So the point, the levels that I've drawn there is just to
It's okay, Brian.
hit home that we went through 40 years of lower highs in terms of bond yields. Now, over the past couple of years, we're starting to see higher highs in terms of bond yields. And so how high could we go? People have talked about 5% as being important. As a round number, I don't think it has anything going for it other than that. I think we need to acknowledge that we have changed bond yield regimes from
CCJ, nice follow through. CCJ is showing 4.72 times relative volume.
That affects equity valuations. It's a new reality for investors, not just bond investors.
So if we punch through here, then next level kind of, like what, 6%-ish or so?
Okay, we got 4 minutes to go. 4 minutes to go.
Yeah. So I guess, we broke through 4 and people were saying, oh, that's as high as we'll get. 4.25, that's as high as we're going to get. 4.5. So every step along the way, every 25 basis points or so, it's felt like that's as far as we could go. So I think, 5%. Yeah, if we get above that and stay above that, that's going to then get people talking about 5.25 or 6. Yeah, at some point we will reach a high, but step back. That longer term trend is still rising for bond yields, and until that stops rising, I think it's a little premature to say, okay, that's as far as we can go, or as far as we need to be prepared to think about bond yields going. Okay.
So far, it's pretty much worked to say we get through one level. Let's look at the chart to see the next level. That's where we're going. I mean, I love it when it's that easy. It has been, frankly, really has been. And that's kind of how a lot of those charts are, right? When you have like a stair-step style chart in reverse.
Okay, we got 3 minutes to go. Less than 3 minutes to go.
To figure out what levels to look at. All right, keeping it going here. Within the market's momentum, I like your 52-week lows and highs chart because it does show kind of where we're at. That doesn't resonate when you look at the index, especially the NASDAQ. If you look at the Russell, you go, okay, there's a lot of companies here probably at year-long lows, but you might not know that if you're looking at any other index. And so, what are we looking at here?
Yeah, so this is just a chart of the on a weekly basis, the 52-week new highs and new lows on the NYSE and the NASDAQ. So the orange line, that's the 52-week new low list. That's making higher highs. The blue line is the 52-week new highs list. That's making lower lows. In fact, you go back to COVID and there was only 1 week that had fewer new highs than last week did. And so, people talk about a new bull market. We've got a new bull market in bear market behavior based on the 52-week new low list. And it's not just, I'll also say it's not just the Russell that you need to look at in terms of seeing weakness. You look at the median stock in the S&P 500, it's making new year-to-date lows, or at least it was last week. And so, the index has held up. That's driven by a handful of stocks. You look at the median stock in the S&P 500, it's down on a year-to-date basis and close to its lowest levels of the year.
Okay. All right. So there's a definite shift in the internals of this market.
All right, so we got less than a minute to go.
With stocks getting
Good luck, folks. Good luck.
Brett has been sort of on a steady deterioration for a while. I mean, that's kind of one of the important things, right, that you brought up. The
First 15 minutes, we're taking profits off the table usually.
That there just wasn't a lot of backup out there.
Yeah, I think that's exactly right.
and then wait for the markets to settle down after 9:45, 9:50. All right, markets are open. I guess. Okay, so we're open. Missed the opening bell. Sorry about that. Okay, S&P. All right, S&P gapping up. Depending on what Powell says, we have potential to make a nice pop. Caesar's pulling back a little profit taking. CCJ looking for a follow through after yesterday's gap and go. All right, Google picking up a bit. Google. Let's look at the FANG stocks to start the day. Apple's higher, Amazon's higher, Meta, Nvidia, Netflix, Microsoft. Microsoft with their chat subscription, $30 a month, or is it $20 a month? I forget.
Percentage of stocks that are getting upwardly revised earnings versus those that are getting downwardly revised earnings. That was
$30 per month. Okay, Microsoft's Copilot pricing, they're going to add to earnings. Right now, we're waiting for the markets to settle down. All right, we got profit taking. Netflix looks good. Nice follow through.
Thanks, Willie. So some earnings revision weakness that aligns with the new 52-week lows increasing and the overall soft breadth and checklist that favors bears still. Thanks for the thoughts, Willie. Always appreciate it. All right. Let's talk some earnings. Let's talk some stocks. Bell just ran.
Amazon, two nice blocks, 319,000. Amazon.
VIX starting the session below 18. Bonds doing nothing. Dollar a little bit firm. Crude oil bouncing back.
AMD.
Just hanging in there. Been hanging in there with some rallying the last 2 days. Trying to start this month off on the right foot after getting blasted throughout October. There's BTC just chilling at 35.
Amazon with two blocks, 319,000 shares at 133.09. Amazon following through. There goes Meta. Meta is ripping. Okay, Bitcoin giving back the morning gains very quickly. People taking profits into that pop. Tesla follow through, looking for a continuation. Tesla.
So we are well outside of what even the street had been prepared for as far as at least the options market goes. But a guidance cut really sends shares tumbling. And then
XLF seeing a big increase in relative volume. XLF. Camping Worldwide. CWH. That's at Lowe's. Not really interesting. HLT. Hilton. Range bound. Hilton would be a good candidate for a iron condor.
Adjusted earnings before all things tax and depreciation and amortization was also forecasted to come in around 712 to 717 million. That was slightly below what they had previously given a range for, around 722 to 24 million. But again, the main culprit, all things, is the fact that their guidance was just such a disappointment. An analyst at William Blair, who did downgrade the stock, did say
okay.
Now the main culprit to their weekly guidance is this program.
All right, the FANG stocks are all on the move. Let's take a look at the New York FANG. New York FANG index. Okay, so this looks really good. New York FANG looks good. We've got 2-to-1 up volume.
Rest of the cloud sector down today too, because there's definitely a little overlap with just the style of this stock as a growth company and a expensive stock on a valuation basis. Obviously.
Okay, New York FANG index looks pretty bullish. The FANG stocks are all pushing higher. Microsoft higher. Microsoft with subscription to their Copilot, Chat Copilot. Let's look at Google. Google's okay, still basing. Microsoft looks really good. Microsoft.
This is a very, very, intense sell-off. Not quite, necessarily an indicator, but kind of a yellow flag at least that these companies don't have expectations.
All right, so some stocks that are showing above average volume. Not interested. Moderna, high relative volume, coming off the low. Not interested. NVTS. Not interested. Match.com. Big gap down on Match.com. Hammer starting to form. Sigma Lithium, SGML. Nope. Progressive Corporation, PGR Insurance. PGR looking good.
I'm really not up on this whole makeup world, Oliver. I will gladly admit that, but I know that Estee Lauder isn't cool. They do have several other brands, like MAC, for example, that are still somewhat relevant, but the flagship Estee Lauder to me is not at all relevant among the up and coming generation.
Okay, FANG stocks, okay, they're mixed, but the majority are higher. NVIDIA taking back some of the losses from yesterday. Let's see, NVIDIA real quickly. All right, NVIDIA gap down. Now it's back to Monday's levels.
Which is now then weighing on some of their growth. They're not seeing that rebound and that recovery in that region that had been expected and I think pretty much anticipated because this company does have, although it's not cool here, it is still relatively cool internationally speaking. Now we did see the company also now going forward, excluding non-recurring items, does report adjusted earnings per share of around 11 cents. That was
Microsoft looks really good. Microsoft looks like it's going to start trending. Maybe a bullish put credit spread. Sell something like the 335, buy the 330.
These aren't just trendy growth names. These are pretty well established names.
Yeah, for sure. Estee Lauder seems like a lot of it competitive losses. To your point, the branding power that has eroded by way of newcomers with popular and cheap and accessible products. So maybe that one a little bit more kind of quarantined to itself. The Paycom situation, given the overlap and some of the business. Human capital management that is going to overlap with some of the other popular cloud companies, maybe more of a broad implication. But,
okay, so far, nice push higher. Microsoft looks like a good candidate for a credit spread. You could go straight calls. I'd use 40 delta or better. Let's see, Microsoft, let's just check. ATR is 61%. All right, so you definitely want to buy on a dip on Microsoft.
Versus 68 cents was expected. Revenue beat as well, 5.8 billion versus 5.7 billion expected. That's up 4% year over year. That all important data center revenue came in flat year over year, but it was up 21% sequentially at 1.6 billion. Client segment revenue that has the PC processors up 42% year over year at 1.5 billion. That beat expectations. Gaming revenue, not a big surprise, fell 8% year over year, coming in at 1.5 billion. And embedded sales were also down 5% year over year at 1.2 billion, slightly missing expectations. On the outlook side,
9:45 a.m. Eastern Time. You get the US S&P manufacturing PMI October final forecast 50, prior 50, narrow range of 50.3 to 50.
Okay. So the margins part seems like it's in line and comforting because right now there is a real pressure that the market is applying on profitability, and so that's good that that part is fairly stable.
Microsoft looks like it wants to follow through.
I still a little bit of trouble wrapping my head around is why, you know, it is. I mean, look, it's getting some back. We're at $100. The high was 132, but we're still above where this company was in the earnings from May, looking back on Q1. That's really when the whole AI trade, driven by NVIDIA, dragged AMD higher, based on largely NVIDIA's numbers and what the market thought would be a
Okay, Microsoft continues higher.
Some of the AI developments happening around the world. The thing is, though, is their chip tied to that. It seems like it's not really producing much at this point. They're mostly talking about the Ryzen, and they're talking about their data center business.
Keep an eye on Microsoft. This looks pretty good today.
Like their MI processor that's like the next wave. It's not a big
Microsoft following through.
Yeah, not yet. And I think that's a lot of the optimism we're still seeing built in the stock, and maybe a bit of the 2.5% rise we're seeing this morning reaction is that hope around the MI 300 chip, which they released back in June. You know, that's expected to really take some market share, at least in the eyes of AMD. It's expected to take some market share in those data center business sales. The company said that the growth.
All right, most of the FANG stocks are following through. Tesla looking for a ramp higher. It had high relative volume pre-market. Could have been shorts covering. Microsoft trading 72% of its ATR. Okay, looks like the S&P wants to keep going. One way to play today's move, obviously, is a strangler or straddle on the SPY, potentially.
Resilient data center business, which is there. I mean,
where are we? We're 419.
Not a lot of big growth. Gaming is down. Data center is basically flat.
Looking for a follow through.
Enterprise services.
Microsoft continuation.
Growth here, but it's basically single digits. It's mid-single digit growth, and not even close to what we're seeing from NVIDIA. So it really feels like they need to start delivering. I'm kind of surprised stock is up, frankly. Let's keep going, Jeff. Let's talk match. This one did get hit, and it has been getting hit for a while. Another blow up, down 14%.
Mm-hmm.
Unfortunately, again, another quarter where
SPY on the move.
The outlook for match was not meeting the expectations out there. Let's look at earnings per share, which did beat at 57 cents versus 53 cents as expected, up 30% year over year. Revenue beat as well. 881.6 million. That's up 9% year over year. Payers, however, declined 5% to 15.7 million compared to a year ago. Revenue per payer did increase 15%, coming in at about $18.40. If we look at tender revenue, that was up 11%. Hinge revenue up 44%. But if we look at Match Group Asia, that revenue declined by about 5% year over year to 77 million. On top of that, they issued an outlook that fell short of analyst expectations. For Q4, they see sales between 855 to 865 million. Analysts were looking for something closer to 894 million. The company also said that outlook includes $27 million in foreign exchange headwinds and a risk of about $7 million to revenue that's tied to Israel.
And Microsoft continues.
Out there. So again, not a great quarter. This is, I believe, fourth quarter in
10
a row
seconds.
we've seen those payers.
Okay, one way to play the FOMC is a strangle. We're expecting a pretty big move today. Could go in either direction.
50 as expected. Again, US S&P manufacturing PMI final at 50 as expected.
I don't necessarily think that's the case, but to some extent, I think there's some evidence because they're not getting as many. The rate of growth is slowing. It seems like the younger people, the Gen Z, are not quite taking to the apps and the online the way the sort of millennial cohort did. It also seems like there was quite a bit of swiping that was going on during COVID, but ironically, the recovery and getting out of quarantine.
Here's October manufacturing PMI headline coming in at 50, however, employment falling to 49 from 51.9. That was here in September, and 49 being the lowest reading for the employment index since June of 2020. New orders as well.
Watching Microsoft.
By a month to the highest since September last year.
If online dating goes out of style for any reason at all, they don't really have much of a hedge.
Yeah, unfortunately for the company, expectations are not better for the next quarter, right? They continue to say that they expect about 40% of tender declines to come from the U.S., 60% from the international base. They do have these weekly packages.
SPY looking for a follow through. So the way to play that right before FOMC, I'm probably going to take a strangle, maybe a buck in either direction. Look for a big move in both directions, actually. If we get an oversized move in one direction or another, it should pay for the opposite side of the trade. All right, so SPY looking for a follow through.
Yeah, if we look at Norwegian first, the earnings per share beat is 76 versus 69 cents expected, but revenue missed slightly at about 2.5 billion versus the 2.54 that was expected. They were up 50. That was up 50.
Okay, nice break higher. Many are anticipating that Powell is going to pause. I think is 100% probability. I think that's what I saw the last time. We can go to the CME Fed. We can go to the CME Fed Watch tool. Okay, just type that in your search bar, CME Fed Watch tool, and we'll look at the probabilities for today's announcement. Most are expecting the Fed will 99%. 99% looking at right now, or 0% for a rate hike. 99% to stay at the same level. Okay, so I think that's pretty much what everybody's expecting. You don't have to look at the tool. You can just listen to CNBC, I guess. If that's your thing. All right, watch your Microsoft. SPY, nice follow through, looking for continuation. Tesla, looking for the follow through as well. Tesla had high relative volume. Pre-market, looking for a follow through in Tesla. The FANG stocks. Okay, so all the FANG stocks are moving higher except for Snowflake at the moment. Snowflake is just sitting pat. It's flat on the day. Everything else looks pretty good though. 10 stocks, you know what we follow here. These 10 stocks, okay, 10% weighting, 10 stocks, New York FANG index. 10 stocks, New York FANG index. Which is reflected in this chart. Looking for a nice follow through. Stochastics turning and firing. Stochastics has fired. That's what we're looking for on the S&P, if you recall. Okay. Stochastics firing. We're going to move higher. Pretty confident that we're going to move higher.
Thanks, Jeff, for the rundown here. A lot of movers. Still some more in that category when we come back. And the winner still has yet to report in the hotel industry. That's been booking. Definitely a stock that stands out.
At 10 a.m. Eastern Time, we get US ISM manufacturing PMI forecast 49 on the prior 49 with a range of 49.7 to 47.8. US JOLTS job openings forecast 9.4 million on the prior 9.61 million. US construction spending month on month forecast 0.4% on the prior 0.5%. US ISM manufacturing prices paid forecast 45 on the prior 43.8. ISM manufacturing employment index forecast 50.6 on the prior 51.2. And ISM manufacturing new orders index forecast 49.8 on the prior 49.2.
Okay, currently trading 1.4 up volume.
Treasuries extend gains. 10-year yield drops 10 basis points on the day.
Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow of futures, forex, and stock instruments. Get a free trial at tickstrike.com.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
All right, so looking for a follow through. Microsoft is hanging out at the highs. S&P continuation.
It's a tough gig trading travel stocks as airlines have gotten whacked, and just talked about due to casinos and hospitality plays down at 52-week lows. Let's get into the sector some more, do some trading. Got Jed Kelly joining us from Oppenheimer and Tom White here in studio. Take a look at some of the
What are we up? We're up 14, 15 handles. 12 on futures. Okay, tick cumulative is still green. Tick cumulative. We would like to see a little bit higher volume. Our vol, I'd like to see like 2 to 1, 3 to 1. For now, though, it looks pretty good. The hourly chart giving us bullish signals. 30-minute is bullish, as you'd expect. 15-minute is bullish. Let's see what the 4-hour chart looks like. 4 hours is a more longer term cycle. That has turned green as well. So that's looking pretty good. All right, so keep an eye on your ATR. If you've got stocks and you're scalping, keep an eye on ATR. Microsoft, for example, is trading 79% of its ATR, 59% of its usual daily range. Daily range on Microsoft is usually about $4.43. Usually about $4.43 on Microsoft. So if you know what it typically moves, it's up $5.34. So the gap up with high relative volume. Okay, that looks good.
Seems like from a consumer's perspective, I get the exact same experience from both these websites.
All right, SPY continuation. So SPY gets up to the highs. If we continue this, get up to say 420, I'd be looking to take maybe some puts up there. Still underway though. 4,200. That was a target for to start the week, Monday, Tuesday. We couldn't get through 41.75. We finally did it yesterday. We closed pretty strong. We had nice volume. And now we've got the follow through above 4,200. Baby steps looks good. So far, if you're a swing trader and you're looking for good signals, ISM manufacturing numbers, let me just boost that again. Okay. Let's look at the number of stocks trading above their 50-day. I want to see improvement here. All right, these are all confirmation signals. All right, we're looking for this to continue. All right, so not just the FANG index, but we want to see this follow through as well. The equal weighted index, everything's the same weight. We got the number of stocks above the 200-day, higher. The number of stocks above the 50-day, higher. And CCI is now triggering above minus 100. So we're looking for this extreme to move in the other direction. Okay, and looking at the S&P 500, for those of you that are looking for signals the last couple of days, we've got a nice signal. Whoops. On the New York FANG, and we should have we have a trigger here. Okay, the last couple of times we triggered. We followed through for a couple of weeks. That's important to recognize, especially if you are just starting some longs today. Okay, so here are your triggers when we move above plus 20. Plus 20, and now plus 20. All right, so number 3, RSI needs to get above 50, but looking pretty good so far. Hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Wednesday, the 1st of November. We're scarcely 30 minutes into the trading day. We have FOMC today and a Treasury refunding. Okay, so S&P continues. Let's see, Microsoft. You know what? Let's take a look at the U.S. 10-year yield. That was up near 4.9%. Big drop there. Okay, 10 basis points, 7 basis points. So we're looking for the 10-year. Keep going down. The U.S. 20-year, if you've got the TLT position on.
So I looked out in the November 17th monthly cycle, so just about 2.5 weeks till expiration. So not a pure earnings play, even if the stock does maybe trickle down here post earnings, you have time for it to read.
Okay, let's look at NASDAQ. NASDAQ, another way to parse the market and see. All right, we've got, actually it's about 50-50. 50 green, 50 red. AMD is number 1. AMD following through after a little dip. CEO coming out and talking about billions in profits next year. Guidance was good. Let's see what Train looks like. TT, Train. Okay, still hanging out at the highs. That one had very high relative volume this morning. Microsoft, looking for the follow through. Currently on a buy signal on the daily. Microsoft announcing that they would start charging $30 a month for their Microsoft 365 Copilot pricing, $30 per month. That's on top of some other Microsoft 365 charge per month. There's a lot of AI out there. I'm using one on my iPhone, which is really good. This morning, I was thinking about what Stanley Druckenmiller was saying about Treasury yields, the reason why Treasury yields higher. He was saying that he didn't feel like it was related to a strong economy like Janet Yellen was saying. Rather, it was rising to various factors, including changes in market conditions, investor sentiment, economic indicators. It's not a sole determining factor. So there was some disagreement there. But, Yellen talking about a strong economy, Druckenmiller talking about yields rising because of inflation and debt, which I tend to agree with. But I also agree with Janet. The economy is pretty strong. So anyway, I have this app on iPhone. It's called Chat On. I think it's $30 for the year. It's been pretty accurate. I've done some research with it. Just ask it a simple question. It's not going to tell you something like, where is Apple going to be heading higher or lower. It's not going to tell you that kind of information, but it will, scour the internet for the best answers to most common questions, and very helpful. All right, so Train Technology is Microsoft. Microsoft hanging out at the highs. Let's go through the FANG stocks real quick. Microsoft, let me just switch to short time frame. Let's go to the 15-minute. Okay, so Microsoft, 15 minutes on a buy. Netflix sitting here. It's been on a buy since yesterday, noon. Amazon, I'm seeing a lot of blocks on Amazon. It's on a bullish signal as well from yesterday. Continuation today. SPY's continuing higher.
The risk profile's a Batman. I call that my Batman trade.
One man's Batman, another man's
All right, hope everyone's having a good day. Okay, Microsoft looking like it wants to go again. All right, thank you, Fran. Teamwork.
Help people understand the world through their lens and invest accordingly. You can call us.
All right, Microsoft, pop. Breakout again.
You have all of the financial tools and support to secure your financial future. That means not
Treasuries extend on recent data, 30-year yield down 12 basis points.
Binge watch the market with the Schwab. Tune in
We have
24 hours
posted
a
the
day,
US
7 days a
ISM
week
manufacturing
at
PMI October
SwapNetwork.com.
report on the feed for all those interested.
Swap Network. Available anytime.
Microsoft breaking higher.
Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Schwab Network.
Looks like it's going to finally get cold here in Myrtle Beach. It's supposed to be freezing tonight. Brrr. Below 32. I know you guys up in the Northeast are laughing. Okay, so Bitcoin flattened out. Netflix looks good. Amazon, lots of block trades. And remember that 115,000 contract reposition. 115,000 contracts. It was, I think, the 115 strike, I believe. That was let me just see this real quick.
Morning Trade Live. We are in our 2 here and 30 minutes session. Got a little action. Bonds rallying pretty big, and stocks liking that. Seems like equities are still firm. As far as movement,
Amazon, 150,000 calls, 150,000 contracts on the February 115 strike for $21 each. That was a November adjustment from 120. Okay, we're at the highs. Microsoft still moving here. Microsoft looking strong.
So a lot of preparation over the next hour. Let's talk some of the data with Ben, post futures with the bunch of numbers out here. Interesting session here, kind of shaping up. We got a little pop in stocks, big rally in bonds there. Bonds have been basically firm all morning, Ben, but it looked like we just got another leg up on the numbers.
All right, SPY's starting to peak here.
I would expect to see stocks rally here. Keep in mind, we're waiting for the Fed. We're waiting for the jobs data on Friday. So I think this is just kind of a temporary focus for us to busy ourselves with, because the market's still kind of in a bit of a chop and just sideways consolidating. But we are getting a little bit of a lift here and follow through in terms of the run-up that we've seen to begin the week, and a nice move off the lows from the end of last week. The data coming in a little bit softer than expected, as I mentioned here. I'm looking at the ISM manufacturing numbers. Well, the PMI number came in at 46.7. That's well below the 49 that we're looking for. Oliver, the ISM manufacturing prices came in at 45.1, a little bit higher than expected and a little bit above the 43.8, but that was the only real number that came in above expectations. The manufacturing employment at 46.8.
That's not a good report.
Missing at
Microsoft trending along a rising VWAP.
New orders, Oliver, which haven't been above 50 since August of last year. Look at this at 45.5, down from 49.2. So this is probably what the Fed wants to see, right? Slowing economic conditions there in terms of manufacturing activity.
To your point, though, this is the one that's been down.
Okay, Microsoft hanging at the highs of the day. SPY hanging at the high of the day. S&P above 4,200. So lately, every time we move above a major resistance level, we come back and test it. We do have a bullish condition with stochastics on the daily time frame for the New York FANG index, 10 of our favorite stocks, plus the S&P 500. S&P 500 giving us the same picture. Okay, so we got a nice change in direction. MACD's about to cross too. Note the histogram bar will move above the zero line soon. Volume was above average the previous 2 trading sessions. Green and above average. RSI needs to get above 50. That'll tell us this trend is strengthening. The 200 day is most likely the first resistance. Now that we're above 4,200. Okay, so that's something to consider. But stochastics definitely giving us a turn. Okay, Snowflake didn't follow through yet. Amazon fading, Microsoft fading. Everything is fading at the moment.
So we're talking about 4 or 5 months in a row here now to the downside, 6 months to the downside in terms of readings lower. And ultimately, this is, again, exactly what the Fed wants to see. A market that's slowing, an economy that's easing off those extremely elevated, hot, revving high levels that we had seen, but not necessarily cratering. So this is, again, possibly what the bulls are looking for. I think you need to combine this with some better than expected data at the end of the week as well to really.
Yeah, if employment comes out with another 300,000 print.
Yes.
Market's going to forget all about it. Yes, PMI manufacturing. All right, Fed at 2 p.m.
A little bit of profit taking.
The next thing to look for here.
Well, don't forget, you also have the EIA numbers coming out today with crude oil, which has been, again, one of those markets that's been somewhat, sticking with the trend, providing opportunity.
All right, TLT.
Follow through one way or the other. The crude hanging out around
Iraq exported an average of
$83 here. Also,
3.533
obviously
million
tied
barrels
to
per
some of
day
the geopolitical
of
tensions that
crude
are
in
playing out
October,
here. But I
according
think
to
at
the
these
ministry.
levels, an indication of what we've been seeing here. Stubbornly elevated levels, not what we'd like to see, but not necessarily, screaming higher and taking out, into areas of concern. In terms of inventories today, we're looking for a small build. Of
This stream is sponsored by Tick. Get free daily pivot points, Fibonacci, and market profile.
All right, looks like a TLT. TLT. Nice run higher with the 20-year Treasury yield. U.S. 20-year Treasury yield moving lower. Bonds moving higher. We got a refunding today. I don't see any news on that just yet. Let me see what this chat will give you.
We'll look for the petroleum inventories, and we'll look for the Fed. So far from done for the day, and this afternoon, 2 earnings. Let's prep. Qualcomm is under the microscope of the one and only Kevin Green. All right, so a changing relationship with Apple, but still relevant to our Apple curiosities the day before.
Yeah, definitely. This will give us some insight into the Apple demand, especially when you're looking at China. Now, we would actually expect Apple to pretty much end the majority of their relationship when it came to modems in 2024, but they've had a little bit of an issue trying to develop and manufacture their own chips. So in September, they actually did announce that they are extending the relationship with Qualcomm here out until 2026. In fact, in order to be able to...
Okay, so TLT moving higher.
To Apple for the next 3 years, if you will. So I think this is actually a pretty decent
TLT having a nice move.
Despite the upside after this announcement, but it's been a very tough market when you're looking at the semiconductors, especially in the motive business and also the analog devices type of business here. The market is actually expecting revenue to come in at $8.55 billion. That would be a 25% decline on a year-over-year basis, Oliver. And the adjusted earnings per share is expected to come in at $1.
All right, TLT on the move.
Once again, another drop of about 38% on a year-over-year basis. Now, the QLT segment of their business, which is really focusing on licensing out Qualcomm's intellectual property portfolio, that is expected to actually come down around 11.9% on a year-over-year basis. In the QCT segment, which is the largest portion of their business, that's where they develop and supply the integrated circuits and the system software, that is expected to contract around 27% on a year-over-year basis. I think right now the biggest focus...
Thank you, Money. Voice of reason. Yeah, we should never chase.
China and the United States, how that can also impact their chip development and also the demand for handheld devices. So I think that's going to be a major focus for them to talk about on the call.
All right, looking good. 20-year Treasury dropping off. U.S. 20-year yield.
So that could be a tailwind for them in the future, but that also begs the question as to why we are seeing a little bit of a slower adoption when it comes to some of these Android devices.
All right, so TLT moving in the opposite direction of yields. Yields lower, bonds higher.
Seems like maybe there is quite a bit of pessimism baked in here to some extent about how they might lose some of their kind of dominance in the supply chain, but that might be somewhat overstated. It sounds like if there's still going to be a demand for upgrades and better connectivity down the road.
Okay, nice move. TLT.
Plus 800.
TLT on the move.
Some strength here, but we are starting to see some results from some of these companies, especially like ON Semi, things of that nature, where we've seen pretty much a dramatic drop when it came to automotive demand for certain semiconductors and things of that nature here. here. So if we kind of get that same type of experience or same type of sentiment from Qualcomm, I think that could be concerning to the downside. But once again, that's been pretty much the only bright spot in the semiconductor space outside of the AI, advanced GPUs, and things of that nature. It's just been automotive, and unfortunately, it looks like we are starting to see a slowdown, and you can see that within the automotive companies in themselves moving to the downside. The EV companies are moving to the downside. We continue to see a little bit of a buildup when it comes to inventory. So I think that might be also a little bit of a concern. So yes, we could have an upside surprise. Market's definitely pricing for a downside move here, but when you're looking at some of the elements that they are trying to expand in, it's really hard to make a bull case that they could come out and provide guidance or provide commentary that would be bullish amid some of their competitors really making a bearish case over the next 2 or 3 quarters.
Okay. All right. Well, it's hanging in today with this opportunity.
All right, nice move on TLT.
Makers AMD powering up here a little bit after its report, 5%. And we looked at it yesterday. I mean, it didn't seem like the most
TLT on the move, looking good.
Shares are up, so I guess the market's got some tolerance here for tech companies after a rough month. Thanks, Kevin Green. Good look at Qualcomm. It's traded. Green Scott Bauer, CEO of Prosper Trading Academy. Scott, what do you think? I mean, it had been taking part really well up until recently, and the pullback in Qualcomm kind of now extreme in some ways, down near the lows. That looked like an opportunity to get in.
Well, Kevin hit the nail on the head with a lot of semis and other stocks in the space right now. I think the market is expecting worse, which is why there is a big skew to the downside in the option market. Qualcomm is one that I'm very cautiously optimistic. I'm not overly bullish, Oliver, but 102, 103 area, which is not so far away from where we are right now, that is some pretty major support. And if
Okay.
Going to trade down there, I want to own Qualcomm there for the long term. So based on that and based on that alone, well, I shouldn't say alone because there is some excess option premium because of earnings. I am actually going to sell next week's 105 puts. I can do that for about $2 credit. So effectively, if the stock does drop, that gets me in at 103. That's an area where I would buy the stock anyway. That is the only reason why I would ever sell a naked put. Otherwise, I would do a put spread, always be, completely risk defined. But the reason being is if the stock drops down there, I want to buy it anyway. So, continuing on your conversation, I think the market is prepping for the worst case, and like you're seeing in AMD, not that that's going to happen with.
All right, let me just check here. TLT, what are the 86?
It does kind of seem like it's in a world of its own. There's not a lot of chips that have been drifting lower for 2 years since Qualcomm's high in late 2021. And it's bounced back. Like I said, it tried, but it didn't get very far. It gets stopped out like every earnings report, and it ends up continuing that downtrend. But that also means that when you've got very company-specific stuff happening.
All right, TLT. All right, starting to come in a little bit. All right, let's see what Microsoft breaking a bit higher again. Microsoft. Can we get some upgrades on Microsoft? No upgrades yet, but looking very strong, Microsoft.
They move pretty in tandem with one another on the upside, but not necessarily to the downside. And I think we're seeing that little bit of a disconnect. But again, I'm really going into this here, looking at the option market, looking at that skew to the downside, the market pricing in really a worst case scenario. I want to take advantage of that excess premium. And again, I can't stress this enough. Only reason why I would sell a naked put is if I would
Taking a look at the Fear and Greed Index, 34 out of 100 equaling fear, and the Crypto Fear and Greed Index, 66 out of 100 equaling greed.
You don't want to get to the 52-week low, but if you do, all right, you own Qualcomm now at cheap valuation. You hope.
Microsoft continues.
Exactly. I could do a put spread. I wouldn't be collecting
as much premium, but my conviction to own the stock at that level there is pretty strong.
Where does the
Taking a look at the VIX, currently down 4.58% on the session at
come from
17.26.
relative to, like the volatility, Scott? So if when you look at just selling the downside, is it because I do want to own the shares, or is there not enough volatility to make it worth it trying to do a spread in the stock?
Yeah, so if I do a spread, which obviously stops me out, the premium level is about half of what I'd be collecting. So, the $2 premium level with stock trading right now at 108, 108 and a half, where it is right now.
We got our weekly
Gets me
EIA
at
data.
103.
Crude oil
I like
inventories,
that report.
Hi, Tickler plus 800.
We're going to see that premium absolutely get
Gasoline
crushed
inventories forecast
after
minus
the announcement today.
0.133 million.
So when we come in tomorrow, that premium level
0.156
will
million.
be,
Distillate
probably cut in
inventories
half.
forecast minus
And we'll
1
go from
million.
there. If the
Prime
stock
minus
is just kind of,
1.686
in
million.
the same range,
Crude
it's
Turkey
unchanged, which is
inventories
very
prior to
positive.
0.213 million.
Nice. Okay. So it makes sense. Because if you do try and turn in the spread,
Okay, Microsoft continuation, following through. All right, S&P. Wow.
ahead of report and ahead of Apple, so we start lining up the dominoes in place to prepare. But along the outskirts are some volatile names to keep us busy as well. Remember Roku? Yeah, that's streaming tech, but also an advertiser. Had a little bit of trouble the last few years finding out where it fits.
All right, nice follow through.
Original content. The market actually preferred the hardware, but the last 3 months have been rough. Roku is giving back all of its gains from a big rally last quarter. We'll be right back to talk about the stock. Still much closer to its all-time lows than its all-time highs.
All right, what is, let me just check something here. I want to check the indices before I make the statement I'm about to make. All right, let's see. Not yet on that. Okay. Yes. Okay, cool. All right.
So once the client knew that she was hurt, your client won't care how much you know until they know how much you care.
Welcome to Schwab Network,
Daily live exclusive content tailored to today's investors.
broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up to the minute market insights.
Example trades and stock-specific analysis.
Remember, folks, daily stochastics is firing a bullish signal. Okay, here's the Q. Here's the Q. Okay. There's the Q. This is the third time since August. 1, 2, 3 stochastics. Look at MACD following right behind as a function of price. Okay, so the way I look at this is you look at stochastic first, then you look at MACD. Why? Because stochastic starts to tell you when a stock or an asset is beginning to close in the upper half of the daily range. Now, that'll happen before MACD changes direction. We got volume tapering off. So looking at stocks that or assets that are closing in the upper half of the daily range would have given you an early clue, but not a guarantee, that the indices were about to change direction. Okay, that's the early clue, stochastics. And I'm using 14, 14.3. You can do 14.1, 14.1. All that does is it eliminates the signal line. Okay, 14.1. All right, so there's your signal line. Okay, so that keeps you from looking at a crossover on the signal line. I look for a cross above 20. Then I look for MACD to follow through and watch for RSI to move through 50. That'll tell you that the strength of the trend is improving. There goes SPY, taking off to the upside. Beautiful. Beautiful, beautiful.
Last quarter, Roku had this big gap up. Let's start there. It was such a big report that you even brought up your expectations because you had it at a sell, and then kind of trim some of that negativity, put it more on a neutral camp. So, firstly, what happened last quarter that was such a big deal?
So for me, it was almost capitulation that here was a stock, unlike the market, that was being priced as a risk-on environment, one which has a terrific strategy for long-term growth with its operating platform, but they had nothing in terms of the fundamentals with net losses through the next 2 or 3 years. No meaningful.
Okay, Microsoft's still going here. Okay, cool.
Price to sales, which is probably the worst benchmark.
At 10:30 a.m. Eastern Time, we get our weekly EIA data.
Roku deserves such a high.
Crude oil inventories forecast for 802 million on the prior 1.371 million. Gasoline inventories forecast -0.133 million on the prior 0.156 million. Distiller inventories -1 million on the prior -1.666 million. And crude cushing inventories prior 0.213 million.
Which is advertising revenue.
Okay, Microsoft.
What's so different, right? They don't have the original content, but they do have the ads. So it's almost like an inverted Netflix model in some ways. And that hasn't really served them great. Netflix has been able to power back to at least kind of
Microsoft's still going. Okay, so Microsoft, if you did take a credit spread instead of straight calls, I'm going to show you the results so far. This is the results so far. I've just taken a credit spread. Okay, so here is a credit spread just intraday while Microsoft starts taking off to the upside. Okay, there is your credit spread. Okay, so very quickly, it's just two options. I just want to show you what the effect is. You got almost a 30% P&L increase, right? It didn't cost me. I got a credit for it. So now if I close the position, I'd be up over 30%. If you're finding that you're always, losing on directional trades, I would suggest learning a little bit about credit spreads, iron condors, iron butterflies, butterfly strategies. They're actually pretty convenient, especially for smaller accounts. Okay, if I'm not going to do any kind of training on it or anything like that on it, but I can direct you to some good video that will probably open your mind to the possibilities of just flipping the way you do things. Instead of buying options, start selling options. What's the probability Microsoft to take off this morning early with that news? You had a catalyst, you had high relative volume, you had price above VWAP, you had an open range breakout. You had so many things in your favor. Relative volume was very high. Look at the relative volume on Microsoft. Tell me this isn't in play. With all of these things in play, that gives you a nice opportunity. So I'm going to go ahead and close this position plus 30%. Okay. All right. So I closed that position plus 30%. A different way to play the markets.
When they're in the Roku ecosystem, stay there like ad infinitum, or do we see people leave, and are there new entrants as well? I do kind of wonder too if Roku might phase out. So the more smart TVs in general have that stuff.
It's pretty stable. Their churn rate is much lower than what we see in digital streaming for that part of the business for entertainment. And you did raise a good point, though, because if you walk into a Best Buy store, you will now see Roku TVs, which is trying to create or stimulate more.
So that was 30% in 30 minutes.
Part of their revenue is still advertising, the digital spot market there, which can be turned on or off at any time by sponsors.
and subscription. Okay. King, really good description and good breakdown of what's happening at the company. Thanks a lot. Very helpful for us.
Thank you.
Appreciate it. Ken Leon, Global Director, Industry and CFRA with a neutral on Roku going into the report.
All right, so we continue higher. Microsoft looks pretty good. So that credit spreads was just one way to look at the markets. You could do direct calls. I mean, calls worked well if you get everything correct. You could do a buy right too on Microsoft. Microsoft looks really good on the daily. The main reason why I was looking at doing a credit spread, a bull put credit spread, was because look at Microsoft. Very, very strong. So you could also do in the money.
At 4 o'clock in the morning, we're going to always make sure that you have all the financial tools.
All right, so Microsoft's still looking very strong. Tesla looking for a follow through in Tesla. Amazon follow through.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free.
Yeah, Bill.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No host better than the Schwab Network.
All the need to know info from every trading day. I'm Renita Young. Earnings.
Yep.
The biggest headlines that move the market, all condensed into a few minutes. Download the Schwab Network app and join in on the latest market trends. Available anytime, anywhere, on any device for free. Recap your trading day with the
That's pretty funny. Yoda, that's pretty funny. Microsoft takes some profits. All right, Microsoft takes some profits. We are up 102%.
Stocks are rallying now. Let's keep talking some earnings as we prepare for tonight and tomorrow. We got Rick Ducat and Jenny Horn joining in for some charts and some fundamental previews here. We talked Estee Lauder this morning. Obviously got blasted, as you mentioned. Felt has been the big winner. So Estee Lauder just needs to, as far as I can see, add an F on to their technique.
All right, so Microsoft at the highs. I would take a little profits off if you're day trading Microsoft.
The world is getting more expensive. If they can keep their cosmetic costs low, it seems like that's translating into really, really strong demand. They also have a really great market for like dupes, which is huge because right now with the like duplicate, like basically like a more like Dior has a more expensive version of a product. Alice has a lot of the dupes.
All right, Disney. I'm thinking about a range bound trade on Disney. Okay, so the way you would play this, now that we're back to almost to the middle of the range, you'd sell a call, you'd sell a put below, a call above, and then you'd buy protection above that. You'd, like, for example, you'd sell maybe the 83 call, buy the 84. You'd sell perhaps the 80 put, buy the 79 put for protection. That's an iron condor. So what you're looking for, and you get a credit for that. What you're looking for is price to stay between those, between say 85 and 83 or 80. So you're looking for price. You're looking for stocks that look like this, that are going nowhere. and you buy, like today's Tuesday, maybe you sell Friday, and you just wait for the markets to just kind of compress over the next few days. Another possible. So here's Disney. So talking about Iron Condor and Disney. Other stocks that are moving sideways. These are good candidates for Iron Condors where they're not moving much. Like Riot. You can see it hasn't gone anywhere. Not expecting to go anywhere. Let's see what some of these other names look like. Rivian. No, that's in a downward trend. So I do maybe cover a call credit spread. Let's see what else. Or you could just do simple strategies like TLT. We talk about TLT. TLT bullish, sell covered calls. This is not going to move massively. So I would look at maybe buying shares over the last week, which we did on the Ackman short. He covered his short. That was Monday. That's the big bullish candle right there. That big bullish candle was the day that Ackman covered his short on yields. So that was the day to buy right around $83. We sold some covered calls that brought our cost basis down below 81 and continuing to roll the calls or take profits on little dips like we had right there. What is that? Wednesday. We had a little dip down on Wednesday. Take some profits off. Wait for it to bounce again because it's just basing in here. So you can capture some premium holding some covered calls for a couple of days at the moment. Looks pretty good on TLT. Oh, TLT continues. All right, looking very good. TLT. All right, SPY continuation. Yeah, Paycom got slapped yesterday. Okay, TLT. All right, so TLT, the strategy, pretty straightforward. It looks like we're basing down here, so I don't know. I just like the idea of covered calls on TLT. I wouldn't buy here at the high of the day. I'd wait for a dip. It tends to dip after a couple of hours into the trading day. All right, you can see TLT. Let's go take a look at the 60-minute. Okay, TLT. All right, TLT, change in direction. All right, you can see the range. All right, so it's buying TLT and selling cover calls. These little dips are getting shallower. You see that? Note the dips are getting shallower. This is a 60-minute time frame. We move higher, we dip a little bit. Move higher, dip less. Move higher, move even less to the downside. And now we're starting to push again. So it looks like the rhythm, it's the rhythm of the night, right? It's the rhythm of the night. Okay, so SPY starting to go. What the hell is he talking about? Just talking about TLT. Okay, Microsoft. What's Microsoft doing? Microsoft looks good. Microsoft looks good for a swing, too. I was just looking at it from the perspective of an example to show you this morning.
Totally. A good report because there's a lot actually more than meets the eye for people. I think also too,
You're funny, Bill.
or MasterCard in a way because they're like totally connected to the consumer now. I love paying for PayPal. It's so convenient because
It's amazing. You never
Microsoft's still hanging out at the high.
no matter where you are, you just remember your password. Okay, I gotta buy Wi-Fi on the plane. I gotta do, this, whatever. Order something. It's always there. Log in through PayPal, bam, bam, bam. It's done. Market though, not impressed, I guess, Rick. I mean, it seems like a pretty clear downtrend still.
I still pay for things in cash personally, so kind of a dinosaur here, I guess. But yeah, kind of
We got kids. It's easier to give them cash,
yeah,
Well,
they take it for sure. But interesting chart here, down like 43% from the yearly highs. We can see that we had a lot of sideways action here, right around the volume profile point of control near about 74. This was a key price level. We saw energetic breaks to the downside both times that we kind of broke below those ranges here. Both of them were centered around earnings too. You can see we had this area and this area. Most recently in August 1st earnings, we had about a 12% one-day drop, and we've really never even come close to recovering. Downtrend from that point, our white dashed line here. Once we broke below 57 or so, that was the old lows from right here, and about where we held the line for a little bit here, really faltered to the downside, made some new yearly lows a few days ago. Still below our trend line, all moving averages still trending down, all diverging from each other. Really just the overall recipe here is one of bearishness. If we look at RSI, we can see we have kind of a corresponding trend line here. We had a little bit of bearish divergence heading into earnings. Those things really turned for the worse. We did make a little attempt at rising above that 50
Amazon.
here, but the trend line held firm.
Looking good, Amazon. Okay, Amazon doing well. Okay, cool. Apple looks like it wants to break higher. Apple. Yeah, great song.
One channel of potential support there coming in around 49. So that would be, a bit of a leg lower there, but that's where, based on our own price history, we can project some potential support here.
All right, so watching TLT, Microsoft. Okay, Microsoft, Henk and Ashley chart. Pretty obvious what's going on here.
So around 57 to 58 would be a resistance zone that would be important.
Zoomed in version is really interesting for this one, I feel like, because it's like a channel within a channel and speaks to how the latest drop off in the stock has carved out further downside and a fairly, active range here with some spots to watch. So good perspective for us. And stock really needs to desperately stay within a couple standard deviations of its downtrend, or else it's like.
All right, let's look at Amazon. Nice bullish chart on Amazon.
The last one, let's talk Etsy here, Jenny, is
Okay, looks good.
It does, and I will say Etsy is, to me, the most discretionary company I can think about. I mean, I've never, ever been on that website and thought I need this. Never, not once. And I actually frequently shop on Etsy. It's great for, small...
All right, LPG, Dorian starting to show higher relative volume. LPG breaking out.
Exactly. I was out and they're buying masks that were the easier to breathe ones. Yeah, that was definitely not a need basis. But for this quarter, I mean, we have seen companies still able to...
Okay, LPG plus 9%.
7.5% last quarter. We also saw still a beat on its bottom line in its previous quarter. So it's not like they have completely missed the mark of earnings, but seeing slowing growth as well as underwhelming revenue guidance for this to-be reported quarter today after the closing bell.
All right, so what's that? SWK. Thank you. Stanley Black & Decker. Okay. Site 1 Landscape Supply, Site 1. They have a location here in Myrtle Beach. Really good. Gapping down. People not buying new landscape, and they're just saying, can you eat a plant in your yard? Probably some. All right, so that gap down, Site 1. BLD is seeing 1.8 RVol. Spectrum Brands, SPB. All right, SPY continuation, SPB. Amazon having a good day. NVIDIA taking back all of yesterday's losses.
Rick, did you guys survive Halloween?
it was very cold here in Chicago. Trick or treating was not very much fun with 3 little kids, but they had a good time. Unusual chart for a few reasons here. Falling wedge shape overall, demarcated.
Apple. Let's see. Amazon. Yeah, Amazon. I have some calls here. Let me see what I have. January 140s.
Yeah, the other thing I thought was pretty unusual, look at where our volume profile point of control is, near the 64 level, basically near the lows. So the heaviest trading by far in this chart happened around this area here where we had these low prices, suggests that there was a lot of activity, a lot of conviction. The question is, were people looking for it to find a bottom, or what were they doing here exactly? So there's some interesting other things about this chart here. RSI was trending upward here. We had a bit of a fake out above that 50 level, but the trend has been broken now. So we are breaking below.
All right, so nice move. Don't forget to take profits off into strength. Take profits when you can, not when you have to. Not when they turn into something other than profits, or the opposite, losses. Okay. Amazon doing well. XLU, nice move on XLU.
And our blue linear regression line all coming in near about 64. So that would be a key area to the upside to watch. Okay.
Boy, it's really getting down here. So I like the idea of a couple different.
Okay. Microsoft, aiming to please today. Microsoft is kicking butt. TLT, nice move on TLT. So that's telling you what to expect with yields, doing the opposite of yields. Okay, nice follow through. Oak. That's pulling back now. SPY just keeps going. S&P 500 looking very strong going into the Fed. When we get close to the Fed, I'll probably take some puts and some calls, about $1 in either direction, looking for a big move in either direction. So if you read Gamma this morning, you know that we're looking for a big move after Powell speaks. Maybe it happens, maybe it doesn't. So I won't go too far out. I'll only go about a point in either direction. So let's say we're trading at 421 going into the Fed. I'd probably buy the 422 call and the 420 put, something like that. $1 out of the money either way. Look for a big pop to the upside and maybe a big reversal back to the downside. Profit in both directions. Or, you can just wait until after Powell speaks and see what the markets do and then trade according to that. Or do both. Wait for the reaction, both directions. Wait for Powell to speak. Then take the direction after Powell speaks at around 3 o'clock. Right now, we're at the high of the day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is November 1st. Looking for a better return on our assets in November and December. Okay. We're looking for this stochastic turning to lead to profits. All right, let me just adjust this. It's off a little bit. All right, so what I'm looking at here is stochastic firing right here, and right here, and right now at this point. Okay, so I'm looking for that. Oops. Okay, so we got these to fire. We got MACD about to cross over the zero line.
at the developing story on a big winner today, Alex Coffee. Generac shares are spiking. How come?
It's an earnings-based move. We'll get some numbers in just a second. I think it's important to look at this one in the context of the last few years as one of those names that really ramped higher during the pandemic and subsequent direct period following the pandemic.
Watch New York FANG. RSI is headed towards 50. If that crosses over, that'll be your signal. Confirmation signal, to be more clear. Looking for a confirmation signal on RSI, New York FANG Index. So we're about to do this now, this week. All right, that looks good. New York FANG looks good. All right, so we're at the high of the day, so don't forget to take a little profits off the table. Okay, we're at 42.25. That should be S&R, support, resistance. All right, you could try some puts here, I guess. You can try some puts up here. All right, so we're trading 1-to-1. Tick cumulative is green, so that looks good. Just about everything is stacked in our favor for the bulls right now. The bears have had it for the last few weeks, all right? So it's not like you didn't make money. Microsoft, let me just go through the FANGs real quick again. Netflix following through. It's a bit overbought right now. Amazon looking very strong. Not overbought yet on a bullish signal. AMD following through, 105. Wow. AMD is trading 173% of its ATR and its daily range, 173%. That's telling me expansion day. Hey, leave my couch alone. Get your claws on my couch. That's the only thing I don't like about cats, for the most part. They start clawing stuff. Other than that, they're cool. All right, no puts yet. Okay, so Microsoft. All right, let me go through these again. AMD, I wanted to look at AMD. AMD, Lisa Su, the CEO, talking about, I forget how many billion she said anticipated. Look at that. Look at AMD. Wow. That's a pretty chart. All right, so if you're a new member, you're looking for this pattern. You see VWAP turned up and to the right. You can see relative volume. Look at the relative volume compared to yesterday, same time. That should knock you off of your chair. You got a catalyst, you got relative volume, you got price above a upward sloping VWAP, and every time it dips, buyers step up. That's a huge win for AMD. Congratulations. Look at the RSI. I call that RSI muscle. It looks like a bicep in profile. Well, kind of. But showing strength. A lot of people will start to think about selling when stochastics gets above, or RSI gets above 70. Yes and no. If it continues to show strength, it'll peg, or because it's a limited or a contained indicator. It can't go beyond 100 or below 0. So it can stay contained within this area. So it stays pegged above 70. That's telling you there's strength or muscle in the market. AMD looking pretty good. Let's go to AMD. All right, nice. Look at the relative volume. That's beautiful. Okay, AMD.
The market higher. So I think there's a little bit of a selling going on, or redistribution of capital across the board in the markets. But look, utilities are higher today. There's still some defensive posturing going on behind the scenes, and I do think that the market is done what we would expect, backfilling to those October 6th areas.
All right, so we get a little bounce. I guess overdue for bulls. Scott, after last month, that we're trying to start off November fresh. You know?
Yeah,
Get that Santa Claus rally going early.
Well, early.
All right, industrials are saying a 2.4 times increase in volume, XLI, relative volume. Okay, that doesn't really interest me. MPC trading 1.7 times. Vanguard Value ETF, VTV. Looks good. VTV, bullish. Dick's Sporting Goods. Dick's Sporting Goods with high relative volume, 1.6 times. EA, Electronic Arts, showing above average volume. That's not correct. That's not correct. Stocks, Electronic Arts. Okay, let's look at Electronic Arts. EA. Electronic Arts. Bouncing at the 50-day. Range bound. Okay. Simon Property Group. We mentioned this one yesterday. Simon Properties. Simon Property.
Movement towards the Fed announcement today.
All right. Okay. Dollar hanging in there right now, but definitely has softened up a little bit since this morning, seemingly giving a platform for stocks to find the footing and run with it. We've got a good little session here underway. Thanks, guys. Scott Derby, George Tillis. Appreciate the thoughts. Trading 360 with Nicole Petalides is up next. I'll see you this afternoon, 2 p.m. Central Time. Lot earnings. So, and Fed, too. It's going to be a busy afternoon. See you then.
Okay, Simon Properties with 1.5 RVol. Simon Properties with 1.5 RVol. Following through.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions.
NVIDIA ripping.
With no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide. No overdraft fees. And enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
All right. So far, nice day.
Broadcasting 24/7 from our studios in Chicago
and from the heart of Wall Street, the New York Stock Exchange.
Up to the minute market insights,
Example trades and stock-specific analysis featuring the smartest minds in the business.
no politics,
No noise.
analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week, schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market today. It's time to look forward.
All right, starting to see a little bit of profit taking again.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. Peace out coffee. I'm Benny Horn. Join us for Next Gen Investing.
1 p.m. Eastern. Only the Schwab Network.
Okay, so SPG looking good. SPG, Simon Property Group. Simon owns a lot of malls. I think they're doing a good job of repurposing a lot of their properties, selling properties. Looking better. Showing $12.16 in earnings, 2024. All right, nice follow through.
Partially offset by lower sales in their gaming segment and additional softening of demand in some of their embedded markets. So they were pretty
Cats are killing each other. Shit. That's pretty funny.
some analysts update their price targets to the downside. Mostly is what I saw. JP Morgan was one, reducing their price target to 115 from 130. We're keeping a neutral rating. Barclays also cutting its price target to 120 from 145 with an overweight rating, highlighting the reduced guidance and some better than expected PC data, which was a bright spot. The data center slightly below is the focus point. Data center is still so huge for a name like AMD, which has fallen always short of NVIDIA this year. But I will say that with today's nice move to the upside, we're still off our highs of the year by about 20%, but now 63% up on the year. Not too bad for AMD.
Yeah, understood. And to your point, the first knee-jerk reaction was to the downside, but you're seeing all the semis higher today. We had one of the brokerages really like the group overall. How about Paycom?
today. This report was a different story. Very different story. So it's pacing for its worst percentage.
All right, so we continue to move higher.
This is a monster move to the downside. We're down 38%. I saw shares down as much as 40% right off the open, but all things considered, they did report some lower third quarter results. Fourth quarter guidance also was weaker than expected as near-term execution risk is posing now a more challenging path back to their high teens and low 20% growth. They do see more headwinds continuing into 2024 and provided a meaningfully lower initial growth outlook of around 10 to 12%. As a result, no doubt about it, tons of analysts downgrading shares today, reducing their price targets pretty substantially. Actually, to me, the most negative thing you could see is no price target, which is keeping downgrading shares also not even.
All right, testing the highs. Simon Properties looking good. Simon Properties with a follow through. Microsoft continuation. A little profit taking. Starting to see less progress now. I look at the volume starting to taper off. Look for this to drift back towards VWAP. It's still very bullish if you're swinging it, but if you're day trading it, maybe you want to take some off.
Business model and the disruption that analysts don't see going away. So I think that's leading to this balanced day of selling. But market have been pricing in like a $17 move in either direction. Today we're down $92.50.
Okay, Amazon. I have the January 140 call. I've had that for a few days now. All right, Amazon.
This has been somewhat of an overhang on the market. We've had mixed reviews on how these auctions have been going over the last month or so. Give us a little lesson in what's going on here and why it matters.
Hey, Nicole, good to talk to you. Well, certainly what drives prices are supply and demand. And the supply is going up. And so think of it as a seesaw. If, in a sense, the supply is going up, then the price is likely to go down in order to entice enough people to come in and buy up that supply. So when prices are going down, yields are going up, or at least ending up being pressured or at least supported. So I think the concern that a lot of investors have is for how long will the long rates remain firm. The Fed controls the short rates, but the market controls the long rates. And I think the worry is that the long rate will go and challenge the 5% level once again.
Right now, we started.
All right, looking pretty good. Having a pretty decent day. If you're just tuning in, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. I had a lot of nice trades working out already today. Microsoft, most of the FANG stocks, all driving higher. Apple is fading a bit right now. Meta is up 2.3% on the day. NVIDIA up 2.7%, back above the area where it moved lower yesterday. So a pretty good day.
Two-year a little bit ahead of the 10-year, so that could be a bit of a divining rod, if you will. And so with the 2-year having hit an intra-month high of about 5.2%, I would tend to say that maybe looking at a 10-year yield between 5 and 5.25, or maybe 5.5, is all I'm willing to predict at this point in time.
So on the cover of Barron's, it said time to buy. I'm going to move on to the Fed, but this is my last bond question. It said time to buy bonds again. And it said the long bear market in bonds has pummeled portfolios but boosted yields. How to invest in bonds blossom once again. What would you say to folks when maybe they haven't been as happy with their investments? What do you tell them?
Well, I tell them first off, it depends on their goal, their time horizon, their risk tolerance level. There are an awful lot of alternatives now to stocks that had not been present a year or so ago. So CD rates that are 5.5%, long bonds that are closer to 5%, also municipal bonds that are yielding quite nicely.
Okay, looks good. Microsoft squeezing now. Microsoft. Okay, the easiest. I hate that. I don't want to call it the easiest part of the day, but the easiest or the fastest money to be made a lot of times is between 9 o'clock, and the opening bell into noon. I think most of you know that. So I definitely wouldn't be chasing here. I'd be thinking about should I take some profits off? Where are my levels? What's my ATR? What does the volume look like? What's the RVol? Okay. What is the chart telling you? Are we a bit overbought? Maybe time to take some profits off.
In December, and then a 2 out of every 3% chance, so about a 67% chance that they're not going to do anything in January. They're going to continue to be data centric, and our belief is that we are likely to see the core PCE on a year-over-year basis continue to take the stairs downward and approach the 2.2% level by the end of 2024. I don't think the Fed wants to be tightening anymore along the way, so that could be a positive for equities because historically the S&P has gained an average of 13% in the 9-month period, which is usually the spread between the last rate hike and the first rate cut. And we think the first rate cut will likely take place sometime in the beginning of the third quarter of 2024.
Okay, as I rate third quarter 2024, and I know you also are looking at the stats between now ahead of election year, and you did mention the possibility of a rally by year end.
That's correct. Well, we just finished a positive indicator going back to World War II, October 31 of the midterm election year through October 31 of the pre-election year, meaning where we are right now, has never declined, and the average total return was 16%. We didn't do as well this time, up 8.3%, but still an encouraging statistic. Again, since World War II and the...
Okay, profit taking, yeah, makes a little sense. I would definitely take some profits off. Get a little profit taking up at the highs. Okay.
Election year since World War II, where the market was up 15.5%. Obviously not a guarantee, but certainly an encouraging statistic.
These are unbelievable. It's basically saying, I mean, to go back and look at this historical data, it's a win. It is a pure win. I mean, there is no losing.
All right, what time is it? It's 11:12. About time to take a little break. Push away from your computer screen. Watch SPY. Maybe some puts here on SPY, and wait for a dip down to the lows for calls going into the Fed, or you could just wait. I'm going to wait until the Fed FOMC. We're a bit extended at this point. We're up $2.48, 0.6% on the SPY. Futures up 23 handles. Tick cumulative is still green, so it looks like they're buying more than they're selling just by that indicator being green and rising. The only way that can rise and be green is if institutions are buying more stocks on the uptick than they're selling on the downtick on a cumulative net basis. All right. So if more stocks are being bought on an uptick being stocks jumping one tick higher. In some cases, we'll get 800. That's when you hear a high tick alert. Other times you might hear an extreme high tick. That's when more than 1,000 stocks tick higher at the same time. That's telling you most of the time institutions are buying it. Sometimes it also tells you that there's capitulation. All right, so you look for that at extremes. You look for those extreme high ticks at extremes on the chart. Might be a pivot low or a pivot high. You'll hear an extreme high tick or an extreme low tick. That's usually capitulation when it occurs at a reversal point. But during a trend, that's telling you that a lot of stocks are being bought. Okay, why do we know that stocks are being bought at the moment? Well, there's a lot of ways to look at it, and this is the intuitive or deductive reasoning that I go through every day. All right, so if you're getting high ticks or extreme high ticks, what are stocks doing? Stocks are moving higher. We got to oversold again a second time. We got to like 10% of stocks above the 50-day, 90% were below. So what does that tell me? When I start hearing extreme high ticks, that's telling me that we have a trend developing or high ticks during the day and during the week. Right now we have a doji. All right, so right now, as Grover had mentioned, we're not out of the woods yet. So we're looking at this. I'm looking at this March low over here on the left, thinking of that as resistance. I'm also watching the 200-day moving average on the daily. Generally, this looks pretty good. Generally, I think we're fine. We got a trigger on stochastic, okay? But the 200-day is right there, right overhead. The 200-day is situated at 42.43, okay? We're currently trading 42.16. So another 7 points, no, 43, 42.43. So we got a little ways to go. If we get to 42.43, that's going to be a test of the 200-day. Do we have to get there? We didn't get to the 50-day the last time we bounced. Also note something here as well. Back in August, we ran higher for about 10 days. We came back down. Then we ran higher for a week before moving sideways. We didn't get above the 50-day. So there is a possibility, I'm crossing my fingers, that this lasts less than the previous two occasions. Okay. So watching right now, the SPY is pulling back. If you're taking puts,
So highly unusual what we are seeing now in this market. That being said, your first trade today is all about
60-minute looks pretty good. All right, so let's take a look at the 60-minute. All right, I hope you follow what I was just saying there. You got a stochastics trigger. So the previous two triggers, the August one took 2 weeks to get to the highs. The October bounce took a week before it started moving sideways. It didn't have as much strength. So I'm watching RSI for strength. Now we're bouncing. The 200-day is right overhead. So most likely going to be resistance. If for some reason we get through the 200-day after the Fed, that would be huge. That would have huge implications on how to look at the markets into the next week or two. Now, if we can't make it above the 200-day and the Fed comes out and the markets don't like it, that's not the greatest. That's not the greatest indication of what we should be expecting. Right now, we got a stochastics oversold turning. So at a minimum, we're looking for a test of the 200-day. Right now, we're coming back from the high of the day. Maybe you want to take some puts. I'm just going to take a break for a few minutes. I'm going to get some coffee. Let me reset the chart here so you're looking at something worth looking at. S&P. Okay, S&P. VWAP is right below. VWAP is just below. So I'd expect a test of the maybe VWAP at this point. All right. So I'm your host, Cousin Benny, coming to you from theclosingprint.com. It's 11:18. Let me get a coffee, and I'll be right back. Don't forget, today's a Treasury refunding day. I don't know what the implications are at this point, but Treasury refunding, a number of things could happen. So I'll cover that in a few minutes. Give me 5 minutes. I'm just going to grab a cup of coffee and stick my head outside. I'll be right back.
So taking a look here, I did identify that we've got a bit of a range though, and I incorporated that $12 spike high because I'll show you why in a second. You've got 12.11. Do the math. Pretty simple. 11.50 is your pivot right now. We're below that at this point. Still in a bit of a bearish pattern. Let me show you what I've got going on here. When you look at that, again, that kind of L-type pattern, as I pointed out, conviction of the downside, sideways consolidation. Look what's going on here as we show you a chart now. These are hourly candle charts going taking a look here at some of the price activity because, well, two things. One is, remember, we're talking about 12 to 11, 11.50. Well, that's our pivot right now. And notice along the way down here, the market's paused in many instances every 50 cents along the way, right? It's very comfortable with that. 75, 50 cents, these increments that we've seen, and it's been very consistent. The trend that we've seen, top left, bottom right, no rejection thereof. As we are currently balancing around 11.50. As long as we hold below that recent spike, we saw 12. One can even argue 12.50, still in a bit of a bearish pattern to the downside. Let me show you that L-type pattern, as I like to kind of think of it as, on a bigger picture, longer-term time frame. And this is why I don't think that the longer-term trend is suggesting a bullish play here. But yes, there could be some room in that shorter, more intraday random type price activity. High conviction to the downside. This chart goes all the way back to 2014, 2015. A double top up around 60, big move lower. Look at this sideways consolidation. Look at the conviction we've seen just this summer into this fall here off that 2025 level, 22 level. And here you can see again testing these lows that we saw back around the pandemic. So this is a stock that's been under pressure. Could it recover? Could we see a little bit of a lift here? Easily, but the trend is still to the downside, Nicole.
Right, understood. Okay, I mean, what do you think when you see those charts, Don?
Hey, look, I already took the other side of Sam Stovall. Why not take the other side of Ben here a little bit as well? So I actually absolutely agree on the front of looking at the sell side. I mean, this thing is from 19 down to 11. It's halted here. Again, all I'm really looking for is a short-term pop, and that's why I kind of call it like a bounce and fade type trade. So I'm not looking out much more than a few weeks in time for this particular position.
All right, next up, looking at the Russell. You're looking at the ETF, IWM. Tell me a little bit about this one.
You know, the thing that's really striking inside of the Russell right now, and I'm not sure everybody looks at it on a day-to-day basis, you should. Volatility is through the roof in there. I mean, it's just Mr. Toad's wild ride inside of this marketplace. Today is no different. From the bell, we sold off heavily. We've rallied back. It's been a wild market. And a wild market like this, I like to take advantage of a trade called back spread. So in this particular position, it is a bullish back spread. But, you know, before Ben loses it, and, you know, because I've looked at the chart here quite extensively, and I can see that the IWM maybe has some support around that like 165 level and could rip back to the upside. So as I turn, on the earlier trade, like a bounce and fade, I'm looking for this explosive move back to the upside here. And I'm going to do a call ratio back spread. Now, the call ratio back spread, it is a D15 expiration. So I sell one contract of the 165 calls. I buy two contracts of the 171 calls. The trade is done for a 37-cent credit. Even though the trade is done for a credit, it absolutely unequivocally has risk between the short strikes of 165 and 171. Okay? But if the market were to completely collapse, you still keep the 37 cents. If we explode higher, we're going to explode right through about that 175 area for decent degrees of profitability in this particular trade.
Yeah, and we see how quickly the Russell moves. Sometimes when we're up, the Russell's up even more. When we're down, the Russell's down even more. Tell me, Ben, when you look at this chart, what does it tell you?
Well, Don, you know exactly where I headed with this one. To call a trend lower, to say the least, multiple time frames. Let's get into, first and foremost, we've got hourly candles queued up here. And you can see that L-type pattern playing out that I just talked about as shares of IWM have come off. We're talking
CBOE volatility index hits over 2-week low, last down 0.74 points at 17.4.
You can see kind of losing some of that conviction and then consolidating. No rejection this lower level though as of yet. And as I take a look at this, I wanted to show you some of the areas of consolidation that I identified that the market's established for us on the way down. And again, here we are currently balancing as you look around this $164 level. So anything below 166 right now is supportive of this bearish narrative. No indication as of yet that we rejected this or that value is moving higher. If any indication, we're seeing the pattern suggests that we could see value continue to move lower here. So let's take a step back here, though, because I want to show you if this pattern continues to play out, even as you go all the way back to the highs from up around 200 back in July. We were just looking at this move lower throughout September, October, and into the beginning of November here. But you can see this as we add some time here is a very reliable, consistent pattern that's been playing out again, focusing right now on the 166 level as we currently balance around 164. And I wanted to show you again, similarly to what we we're just talking about as far as American Airlines, right? You get, again, high conviction to the downside, sideways consolidation, and look at what's going on here with the recent lows coming into this fall, how we're retesting those lows from last fall. This is a high inflection point, the June lows from last year. This is an area where we want to have heightened awareness. Now, again, similar to American, could get a pop here, right? We're going to see a move one way or the other with conviction, and as we either continue to the downside in the direction of the trend or find our way back in the middle of this range here. But this market, I would argue, IWM, Don mentioned the volatility we've seen. I would think we're not going to spend a lot of time. By definition, that's why they call it an extreme, right? Nicole, you don't spend a lot of time down there.
Right, and that's the whole point. And when you're the bull or the bear here, I guess you could really make the case for both. But Don, your final thoughts?
Yeah, ironically, that's exactly why I use the back spread. So I use the back spread thinking to myself, look, if we explode back to the upside, I want to be part of it. If we are going to take off back to the downside, I'm still collecting a small credit on the trade. And again, that's part of the trade logic, of course, of this call ratio back spread.
Okay, last but not least, Magnificent Seven member Microsoft. Your thoughts here today?
Yeah, this one I'm picking just because I wanted to get contentious with Ben. All right, so first and foremost, if you look at the Magnificent Seven, you look at some of the peers in the group here, there's actually been some decent sell-side activity. NVIDIA has actually seen some rough sell-side activity, NVIDIA hitting like the 400 level. You take a look at Tesla, some heavy sell-side activity. Anyway, across the board, there's two standouts in here. Amazon has had a nice bid to the upside, and Microsoft. Okay, I want to look at the Magnificent Seven as, look, they're on the dance floor right now to possibly descend a bit lower. And as such, I think stocks like Microsoft and Amazon may actually play catch-up. In this case, though, I selected specifically Microsoft, and I'm giving myself ample time here. I'm going all the way out to the January 19th expiration. I'm going to be buying the 325 put, selling the 315 put. So it's a $10 wide put spread. The put spread is actually done for a 265 debit. Now, remember, this thing can be exploiting to the upside, but it's all about the group. It's all about the peers. It's all about, look, if the Magnificent Seven are going to come off, market caps of all of them are going to descend at some point.
Yeah. Well, I mean, at this point, I like when you want to get contentious with Ben. Ben, bring it on. Your thoughts on the chart?
Oh, he's gone there, Nicole. I'll tell you, it's pretty clear that when we were back in school and studying technical analysis, Don skipped the chapter on the trend is your friend, right? Because this one, we're trending higher, complete against the grain of the rhythm that we've been seeing. You can see again in this chart, high conviction to the upside. It's a mirror image of the last two names that we looked at. It's sideways consolidation that's been occurring after a big move higher. This is acceptance of that. And we're looking at price activity going back to the lows that we saw in March around 243. Let me show you what I went ahead and did. I identified those areas that I like to look for, these areas of consolidation where the market pauses, and not only pauses, but honors in a very predictable fashion. Look, we were talking about 306 being significant after rallying up to 366, and look how that held in a very reliable fashion here. Currently bouncing around 338 right now, still referencing 306 as the kind of line in the sand in terms of this time frame. We're looking at 4-hour candles, but hey, this plays out as we add time to it. Going back to January, we're going to see down around 225. So it's not just the move up that we've seen recently. Sideways consolidation in the form of acceptance around this 338 level. And hey, while we're at it, let's do it again. Let's just add a little more time on here so you can see this longer-term trend to the upside, which continues to play out. Again, no rejection. As I look at this chart, I see really one big move up and then an area of sideways consolidation. But just given the benefit of the doubt to the bulls, I added one in here because sometimes we see these kind of overlapping rotational areas, but we have seen momentum continue higher. We're not seeing rejection as of yet. In this instance, I wouldn't want to see it below 285, but I think you could sort of view this large area as just one big area of consolidation right now. So, yeah, we could roll back over at this point, but the trend's to the upside here across multiple time frames, Nicole.
What? He skipped trend is your friend class? I can't believe. You know what? Don Common. Schwab Network is your friend. You get the final thought.
All right, so I grew up as a quant. I'm always going to be a quant, not necessarily a market technician. And the quant in me looks really at the group peers. I think at this point, you've got Amazon and Microsoft is the last stock standing. We'll see if they're going to get any sell side here in the near term when volatility starts to pick up after the Fed announcement.
Thank you both so much. Great to see you both on Fed Day. Important. Don Kaufman, co-founder of TheoTrade, and Ben Lichtenstein on the charts there. Thank you both. Coming up next, we're going to spotlight commercial real estate. We'll be joined by the CEO of Whitestone REIT, and we'll get a very detailed update on WeWork and that bankruptcy potential.
I was born on the south side of Chicago. Now I'm working for
All right, so we're back down the VWAP.
4 o'clock in the morning. We're going to always make sure that you have all the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime.
All right, so we're back down the VWAP. VIX moving back to the highs. AMD at the high of the day. Look for BNC pivots going into lunch. Looking at for BNC pivots. We should see maybe AMD peeking out a little bit. It's 195%. Jesus. 195% of its ATR and daily range, 195%. So let's, you know what I wanted to do before and I forgot to do it. AMD. I wanted to look at the daily chart. AMD. I thought I had this. Maybe this is it. Yeah, okay. So this is the last time I marked up AMD. Pretty clear what's going on here. All right, so at least from my perspective, you've got a downtrend. All right, so either this breaks to the upside or not. Looking pretty good, though. It's staying off of that lower trend line. We're back above this volume by price level here. Right along here is volume by price. Okay, once we get above this level, all right, all of this is lining up now. Okay. RSI, oops, RSI. For the most part, RSI has been spending most of its time below. Will this be the change in direction? It's had a nice 4-month. It had a nice 4-month consolidation. AMD is going to be right up there with, most likely be right up there with NVIDIA, maybe less so with Intel, Super Microcomputer. There's a lot of names that are going to benefit from AI. I think you would agree. So having some exposure to this area in the long term for your kids, if you have any.
not so much.
Okay, this looks pretty good. AMD. Love the setup on AMD. I'm not going to chase it here. I wouldn't buy AMD now, but I would definitely be interested in AMD if it breaks above the 107, the 111 zone. That looks pretty good. AMD. More than likely, a lot of people are watching this one. Let's see. Earnings were a 48% surprise, and they beat by 4% or 3 cents. AMD beat by 3 cents, at least Lou. Yeah, it looks pretty good. So we got a first stage base. First stage base. Nice. Yeah. Okay, so AMD, there's no rush. There's no rush. Should never be in a rush. Looking for a breakout.
It's unbelievable. And Adam Newman back in the news, even maybe competing.
I'm sorry, can you say that one more time?
Adam Newman, I think he's back in the news. I mean, he might even be competing with WeWork now, right?
Yeah, potentially. I mean, there's going to be a lot of players that are going to be within this space. Let's see how this all.
Okay, man, the earnings for 2024 got bumped up. Growth rate is 68%. So over the next few weeks, if you get an opportunity, I'm going to be definitely looking for an opportunity. Okay, let's see. Let's see what she said. Probably in the news. AMD. Parsons. Just reading through. Advanced Micro rose 4.5% in heavy volume and reclaimed its 200-day moving average. Late Tuesday, the chip company beat third quarter expectations. Current quarter outlook missed estimates. That said, there's a lot of good things here. AMD. Okay, AMD cuts price target. AMD shares rise. Revenue beat analyst estimates. Deutsche Bank adjusts price target to 110 from 115. Raymond James adjust Advanced Micro to 125 from 145. So they're pulling their price targets back. Morgan Stanley slashes price target on AMD to 128 from 138. Okay, all of these are adjusting their price targets lower. All right, let me look at Earnings Whisper and see what that tells me.
Businesses still do very well. One of the things that separates Whitestone is a little bit more of a local operator. We love to get into a community, find out who are the best at certain categories, and look to
AMD.
centers with those businesses. So it's very much an active, hands-on approach, a little bit different than others in our sector.
I don't know. I like the way price action is telling me something different than what Wall Street is saying. Okay, earnings growth 29.6%, revenue growth 4.2%, revenue surprise. Okay, revenue grew 4.2%. Okay.
Yeah, sure. Whitestone had a very good quarter. I guess I would highlight it by probably the most important metric I would tell you for someone in our area, which is tenant demand. We saw our occupancy in our centers up year over year about 20 basis points. We've been able to grow our rent levels by a little over 5% annually. And then our organic growth is very strong. So really pleased with the fundamental performance of the business. We, like others, have seen the impact of higher interest rates. Whitestone has long-term debt, most of it at fixed rates, so we're not that subject to increasing rental rates. But that has been a headwind on our results this year, and accordingly, we adjusted our guidance because of that higher interest rate earlier in the year. We are very positive about 2023. As we head into the holiday season, I think we're excited about closing the year in a strong fashion. Lots of demand in our centers. Our centers are populated. Our biggest category is restaurants, and we continue to see people, especially younger folks, eating out more often than ever before. Probably the biggest competitor to grocery stores, I would say, is the restaurant business.
Yeah, understood. And you mentioned the high rate environment. What are your thoughts on just some big picture? People are asking about,
Yeah, AMD looks good, right? Okay, so let's keep an eye on AMD. We're starting to see a B pivot potentially on S&P. What time is it? 12 o'clock. We got 2 hours to go. Do I want to take a strangle here? I'm going to wait. I think it makes more sense to wait till right before FOMC, like maybe 15 to 20 minutes before. We'll look where prices are and how it's acting. I'd like to take a strangle, $1 out of the money, either direction on the SPY. So I'll take puts and calls, $1 out of the money either way. Look for both sides to get tagged for a profit, and then wait for Jay Powell after 2:30, 3 o'clock to see how the markets react for a trade thereafter. Strangle before, wait for a reaction thereafter, 3 o'clock, see how things settle down. Or you can wait until tomorrow too. So far, the FANG stocks, S&P 500, the Qs are all set up because stochastics got oversold, turning, number of stocks above the 50-day, number of stocks above the 200-day. Everything is lining up for a bullish leg. It's just a matter of how long can we trend higher. Tick cumulative showing that institutions were buying as well, more than they're selling. It's still only 1-to-1 up-down volume right now. So it was 1.5 earlier today. Now it's 1. Yesterday at the close, it was 2-to-1 on the NASDAQ. And today we had a nice follow through on the NASDAQ. So everything is set up neutral to bullish today for now. Tesla starting to turn. Keep an eye on Tesla. Need to get back above VWAP. Okay. They're going to trick the bears, trap them.
Binge watch the market with the Schwab. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device, for free. Schwab Network.
Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. Don't place better than the Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Trading 360. It's time for the Disruptors. George Sells is with us, Senior Markets Correspondent. Here to talk about today's company, NXP Semi, tickers NXPI. It is down 1.8% today. Tell us a little bit about your thoughts on this one.
Well, Nicole, there's a couple things to mention. One, the transports are down quite a bit since July, and semiconductors also. And I use these as two sort of markets. The markets have been performing poorly since July because we're still in a correction. And if you look at some semiconductors, companies like NXPI, for instance, even today with the tape higher, we're seeing some weakness alongside some of the other names that reported recently. I'm going to use ON Semiconductor as an example, symbol ON, which actually was down about 20% on its recent earnings call based on some guidance was actually cut. Now, NXPI seems to fit that same sort of narrative, but one of the things about this company is that it focuses on mixed signal, analog, and digital semiconductors. It's used across multiple industries, things like communications devices, IoT, automotive, and I think this is one of the areas that has quite a bit of exposure in. But they also make microcontrollers and powertrain chips for the automotive sector as well. Things like touch haptic screens and so forth that are used in the consoles of vehicles, but also semiconductors that essentially communicate with powertrains in vehicles. So if you consider the call today, it looks like Oppenheimer reduces their target because the company is still profitable, but they're actually being a little bit more conservative based upon some of the things that are going on in the industry space with some guidance being cuts across multiple competitors, but they reduced their price target from 245 down to 220, but they do maintain outperform rating on XPI as they are going to be reporting earnings on the 6th of November next week, so that's something to keep in mind. They are expecting as well, if you look at their earnings estimates, it's expected to be down about 6% at $3.59 year over year, as well as sales, which are expected to be down about 1.5%. So that's something to be mindful of as we move into next week. But I will say this, that the stock has already made quite a big move to the downside. It's down about 16 or so percent in the last 30 days.
Right, understood, but still has this outperform rating. So what does that mean for your example trade today?
So if you look at the price action using candlesticks, there's a couple of gaps. One, there's a gap all the way back up to potentially the 170.
NVIDIA at the high of the day. Apple pushing. Apple's up $1. Tesla turning the corner, getting back to VWAP. SPY looks like a S&P looks like a B pivot. I tell you what, it's so freaking gorgeous outside. It's sunny. It's a little crisp fall temperature, very light breeze. As Brett Steenbarger, if you know who he is, Brett Steenbarger, Steenbarger, Brett Steenbarger, very well known in investing circles. He's also a trading coach over at SMB Capital, which is a big prop firm with lots of people that make lots of traders that make over, 6 figures, a few that make 7 figures. Brett Steenbarger, he teaches a concept which is pretty straightforward. You should get out of your chair. If you're going to trade full time, you should get out of your chair a couple of times a day, take a break, take lunch. The market's going to be there when you get back. Come into the day with a game plan. Know what stocks are in play. I've just subscribed to a pretty expensive service where I can follow these stocks that are in play. We showed you this morning for your benefit as well as my own. But look at what stocks are in, excuse me, what stocks are in play during the day. have a focus for the day, take a break during the day. All of these things will add up to higher or better results in your trading and investing. You know, nothing worse than being so overwhelmed that you have so much crap in your head that you don't have a focus. You know, you should have a process you go through every day. I have a process I go through every day, you know, after waking up, you know, just a light breakfast, if anything, coffee, take the kids to school, come home, I chill for a few minutes. I don't really look at the markets, or generally I don't look at the markets in the pre-market because it really doesn't matter pre-market unless it's like something really unusual, in which case, you know, I will pay attention. But what I'm looking for is stocks that are showing very high volume pre-market. One of them was TT. That was trading four times volume pre-market. And you can see the result here, the big gap up. Simon Properties had very high relative volume. That followed through again today. So these are things that we can see pre-market, and knowing whether or not the stock is going to be in play is a big plus. Look at Amazon. Amazon pushing above the 50-day. Now we've noticed that, and some of you also have helped with posts in the trading room and direct messages. Amazon's been seeing some very high conviction, some very bullish conviction. You've got Amazon gapping up to get again today. Look at the relative volume compared to yesterday's same time and yesterday at the open. 2 to 3 times normal. You got a catalyst. Microsoft, same thing. Microsoft had a catalyst this morning. You had price above VWAP, high relative volume. When you have these components, that's a good setup for a in play trade for the day. All right, so just waiting for the markets to either give us a B pivot or push a little bit lower going into the Fed. I don't have a beef with direction at the moment. We do have a slight leaning towards bullish. Here's AMD again. A lot of stocks looking pretty bullish. Look at NVIDIA. Taking back some of the losses from yesterday. Look at Microsoft. Look how pretty Microsoft is. Okay. So you see a stock like Microsoft and you think to yourself, okay, if we get above 347, this is probably going to 366. All right. So you got another 8 to 9 points overhead, maybe 10 points, maybe more, maybe 20 in the short term. Okay, so what would I be doing with Microsoft? Well, this morning I took some credit spreads. I sold the near the money put, bought out of the money put, and as this started to rise, I took profits off. It was a 30%. It was just an example that I was doing to show you that you can trade this in different, using different avenues. You know, you could take straight calls, which that would have worked out pretty well as Microsoft continued higher. The takeaway is we see high relative volume. We see price above a rising VWAP. We had a catalyst this morning. Microsoft is going to offer its chat or Copilot pricing, ChatGPT Copilot pricing in its Microsoft 365 for $30 a month per user. Okay, so we're looking pretty good here. Okay, Cal-Maine Foods. Egg prices had come down quite a bit recently. Cal-Maine Foods looking pretty good. Cal-Maine seeing 1.5 RVOL. Range bound. Okay, plus 3%.
Solar as well, and they specifically mentioned Meta, Amazon, Apple, and Walmart in that. Also, of course, we have the longer term impact of the IRA, giving more certainty to people that want to invest in the space. So that's positive. But the negative in the short term, until the interest rates come down, there's still going to be pressure in the space.
All right, so the rates do equal pressure, at least in the near term, but you gave that industry outlook for 24, 25, and that probably goes into what Brett's talking about when you said about maybe some longer term investment ideas. You said First Solar was one you like, Brett. What other names do you like for sure, other than, because, you know, you have the winners and losers in the group, it seems.
Okay, Apple, all the FANG stocks look pretty good. Amazon, back to the high of the day.
In terms of how to play it, we look for companies that maybe have some sort of competitive advantage. And so what you've seen is the component suppliers in general have had a very tough outlook. And so outside of First Solar, there's some companies facing a challenging outlook there. So where would we look? Besides First Solar would be more to the developers, which have been plagued by the higher interest rates, but we think that will work through with time. And so we would look to a company like Brookfield Renewable, which is not a solar pure play, but is developing projects across solar, wind, battery storage, etc., as another way to play with overall renewable.
What about Enphase and Sunrun and some of the others that we think of when we think of solar?
FTDR, what do they do? FTDR, front door. Are they some sort of
There, where I would look is to Enphase. Right now, we have the stock
door cam? What do they do? Front door. Front door.
Today, so Enphase is best in class in terms of margin. So I think it's one to keep on your radar screen. But even with
Maintain and repair homes, front door. All right, nice pop. Look at the volume on front door. FTDR.
Look, it's fair. You have a tough rate environment. You talked about the component suppliers, maybe seeing a tougher outlook, at least here for the next year or so. Plus, Legal, Charles Schwab, Brett Castelli of Morningstar. Thank you both, Lee and Brett. That's going to do it for us here on Trading 360. I'm Nicole Petalese. Thanks for being with me. I will see you at 2 p.m. Eastern Time for the watch list for a Fed Day special. Make sure you join me then. That's what I'm next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Powell for 5 years in a row.
Volume 3 days. That looks good. Front door. Nice pop.
No monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide. No overdraft fees and enhanced security features to keep your money safe. Also, because your investor checking account is linked to
All right, so Russell, let's take a look at the Russell IWM. Okay, reversing. You doing RTY? Okay. Noble Energy, NE, Noble, NE, Arval, 2.5 times. Williams Companies, WMB, 1.5 times Arval. Modine Manufacturing, that's from the IBD 50. Modine. All right, trying to turn. Green Brick Partners, that's a builder. Green Brick Partners, 2.82 Arval. Green Brick. Gee. They have Atlanta and Dallas.
Available anytime, anywhere,
on any device for free.
Schwab Network. empowering every investor and trader.
Okay, green brick 2.82 Arval. Fangs look pretty good. Fangs are looking pretty good.
Empower your portfolio with the Schwab Network. He's Alex Coffee. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
What time is it? It's coming into noon. Let's see what these guys have to say.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all of your favorite streaming services. Schwab Network available anytime, anywhere, on any device or free. Schwab Network. Morning traders, welcome to Fast Market. I'm Tom White. We'll get a great lineup for you today, including discussions and strategies in PayPal, which has pulled back about 26% so far this year into their earnings, and Starbucks, which has fallen about 20% from 52-week highs in May into their quarterly report tomorrow morning. And like we'll break down consumer sentiment data on Airbnb, which has trended lower over the last 6 weeks and reports earnings after the close. Now, 2.5 hours into the trading day, stocks are in rally mode after another dismal month for equities wrapped up yesterday. Falling yields are lending support to stocks as traders prepare for Fed Chair Powell's press conference, which happens in about an hour and a half. Now, let's take a look at 4 major indices, which are all at session highs, but mostly in the green. The benchmark S&P 500 up nearly 0.6%. Dow Jones Industrial Average up over 120 points, or nearly 0.4%. The tech-heavy Nasdaq 100 up 0.8%, leading to the upside. We got some big names in that platform: Amazon, Netflix, Nvidia, Microsoft, all positive. And the Russell 2000, the small caps lagging once again after falling 6.9% in October. Pain continues for small caps. To help me break down this market action, let's bring in my co-host Kevin Hayes. Kevin,
All right, S&P looking for a higher low to give us an B pivot. Let's see what these guys are talking about today.
How do you think we're set up here for the next 2 months? People are content with knowing what's in store for the next 2 months, or at least having an idea.
I think the mutual fund selling is over. It's very important that October 31st, that selling has ended. Seasonality is a real thing. And actually, if you go back to 1985, the median return in November for the NASDAQ has been 3.85%. So you're definitely setting up between the mutual fund selling done, seasonality kicking in, and we'll see what happens with Apple, which we'll get to later. But I think today with the Fed, I think Powell, as the market's saying, is not going to raise rates. But ultimately, where I think there's a ceiling on stocks longer term is that the Fed and fiscal policy are at a counter trend. They're fighting each other. And the massive amount of fiscal stimulus we've had over the last 3 years is still working its way through the economy. And I don't understand how the Fed can say, we want to slow growth, while you still have billions and billions of dollars being spent locally with different programs inside of the American Recovery Act. And so I think that means higher inflation, higher yields, which ultimately puts a lid on stocks. But seasonality is real. And so I think if I were to trade, I would be going long NASDAQ for November.
Okay. Let's turn to Dracula and the Grinch. The Grinch first, because I hear from Dracula a lot. I mean, you have been negative stocks for a long time, right? I mean, the balance of the entire year. Have you come around at all to a more positive view, or no?
No, the bite of the Fed tightening, the lag effect is only going to increase.
And we're going to see further slowdown in economic activity, leading to lower earnings and more disappointments and pressure on the stock market. Stocks have probably seen their high for the year. And the real focus right now for our clients is going to be in the bond market. And that's where the action is. And as you know, Joe mentioned with the refunding, it was positive. But the fact is that the federal government's running a $1.5 trillion deficit, and the bond issuance is going to accelerate and put pressure on yields. However, where they are now is a very, very acceptable level for investing. So what happens, Weiss, if later today Powell acknowledges
Looking for a C pivot.
to a
Looking for a C pivot in the futures and S&P at the moment.
believe that they are done, that they don't have to do any more because the bond yield backup has already done a lot of the work and the heavy lift for the Fed. And yet he's confident about the economy enough that he leads us to believe that soft landing is still a possibility, that he thinks inflation is going to continue to moderate. How does the market take those comments today?
Well, I think given what the sell-off in the market we've seen in NASDAQ over the last 3 months, that the market's looked for any reason to rally. But I don't think that'll be the case. I think it's unrealistic to assume that Powell's going to go from being super hawkish to even giving the doves something to hang on to. So he will give a nod possibly to the tighter credit conditions and to the slowing economy. He may say we're going towards soft landing, although I don't think he's going to predict it. That's not what they do. I just think that, to his point, that he's right. That it doesn't matter if the Fed's done. What matters is where rates are, how long they've been there, and how long they will be there. And that die is cast. So the economy is going to continue to slow. And it doesn't matter. We don't have to declare today that we're going to recession or not. I think we are. But the fact is that's the direction. Markets trade on direction. And that's where, so I don't think there's much upside to the market. Well, it pops here and there. But the market's brutal underlying the averages. I mean, it really is. Single stock volatility is a killer.
All right, well, we'll get to that in a second. Market right now is pricing out any more hikes. 21% in December, 28% in January. That's, that moved a little bit, I think, after that data came out. Steve Leisman, our senior economics correspondent down in D.C., obviously, because he's going to be in that room asking Chair Powell a question today. What do you think's likely, Steve, that we get today from the chair?
Well, I think that there is some risk here that the chair tries to be a little bit more hawkish than the market is. And I want to just talk about the idea he's got a couple problems here. The first problem he has is that, remember, the committee statement is still sort of leaning towards additional hike. So is, as far as we know, the most recent forecast. Then he's got this strong economic data that still seems to be out there, a bit weaker today. The bigger problem, though, is how the market is priced. Let's just talk about that. Take a look at the probabilities here. 0 on November, that's going to happen today. And then a very small, that's not the one I want to talk about first. I'll go back to that. I already talked about that right now, which is, look at what after the September meeting, there's the one I want to talk about. 21% probably in December, 28% in January. Almost no chance in the market that the Fed hikes. But now look at the change from December, where he had the market on at least an even chance or a 46% probability of a hike. And now it's just 21%. And so what is the question here? The question here, I think, is does the chair try to move the market back to a place where he has some flexibility back? Is he concerned that the market has gone too far along in pricing out hikes and then on the verge of pricing in cuts that he may not see to be necessary? So the first question is, does he sort of lean hawkish? The other question is, does the market really take in or embrace that hawkish and say, you know what, you may talk hawkish, Powell, but we're done with you. You're done. We're over.
But I wonder how many times today he uses the word patience because of what's happened in the bond market, Steve, and where yields have gone and that currency that he probably feels he has now because of the bond market, as we just suggested, you've said numerous times, doing a lot of the work for him.
Right. But you started the segment saying it's not what they do, it's what they say. At some point, it is what they do. And the question is, Mr. Chairman, do 2 pauses equal an extended hold? This will be the first time they haven't hiked over a 2-meeting span since early 2022. And if they set this up for a third one, well, you know what? The market's going to say, okay, you're talking tough, Mr. Powell, But at the end of the day, you're not acting tough. So I'm going to start to price out that height. Now that may
All right, back below VWAP. So we don't have a B pivot yet, or so it seems.
I just don't think he wants to emerge from this meeting with the market being more dovish because of things he said.
Great point you make, especially underscoring the fact that it would be two pauses in a row. Right, we need to get our arms around that too. We'll see what happens. Steve, we'll look for you in the room too. Can't wait for your question later. And I'll see you on closing bell. Steve Leisman down at UC ahead of all of that. Okay, now Rich Saperstein, something you alluded to. You said, I think the exact word you said, the real actions in the bond market. So Stanley Druckenmiller, right, legendary investor, recently bought what was described as a massive position on the short end in 2 years. So he was on Squawk Box this morning, talked about rising deficits, what it's going to take to fund that as a result, this sort of new environment we're in and what it means for the markets. I want you to listen.
It seems that bonds are adjusting to a post-QE world, but for some reason, equities haven't. So that's part of the problem. I think, given everything I just talked about and given the geopolitical situation, everything else, I don't think it's unreasonable to think that we're not going to continue to sell at 20 times earnings over a long period of time.
So this to me smacks of almost exactly what David Tepper told me a couple of weeks ago. From QE to QT, different environment, different multiple. The greatest wild card is, what's the right multiple? No one really knows. But Druckenmiller's point is that multiple, 20 times...
AMD still not giving up the ghost.
...in this new post-QE, rising deficit, slowing economic world. Make sense?
Total sense, because you're having pressure on corporate earnings, rising rates are putting pressure on borrowers, both in mortgages, student loans, auto. But I think there's a framework to look at. Take a client that is wealthy and wants to stay wealthy, and you have a targeted rate of return there. So let's say they want to double their money in 10 years. They need a 7% tax-free rate of return. Well, last week, we were generating 5% on 10-year lockout munis. So if I've got 5% nailed on tax-free rates of return, how much risk do I have to really take for a client that wants to double their money in 10 years on the equity market? Couple that with where multiples are based on expectations of 246 in earnings on the S&P next year, don't see it happening. So it's a good time to pull back on risk and focus on where there's opportunity, especially in the tax-free muni market.
This is what you hear. There's better risk reward, Joe, outside of the stock market, whether it's Stan Druckenmiller, one of the greatest ever. Dubravka Lakos was with us yesterday at JP Morgan. When I said, what is the best idea you have right now? And he said this.
It's right now. Very simple. The whole year we have been saying cash is king. Why? Because we're saying you can basically clip roughly 5% yield at zero risk. So the Sharpe ratio of that proposal is pretty darn good. Equities better give you 12%, 15%. Not that easy.
All right, now I got one guy saying bonds and another guy saying cash. What do you make of that?
So for the answer to be cash, you have to believe that the environment over the next several years is stagflation. I don't see it that way. I don't think we have stagflation. I think we have a deflationary force that continues to emanate from technology. I believe that when you look out over the next 12 months, what you're witnessing is that the better opportunity absolutely is in the bond market. I think that's clear. And a lot of the reasoning behind that is, yes, you have that deflationary force of technology, but in fact, you also have, in addition to that, a slowing economy. So manufacturing, 12 consecutive months now in contraction territory. Canada Goose, what did we hear from them this morning? Estee Lauder, what did we hear from them? Charles Schwab announcing a very unfortunate, significant reduction in headcount. It's beginning. The lags are taking hold, and the economy is going to contract. And therefore, you have two powerful forces that work to the advantage of bond investors.
Well, because he Bryn Druckenmiller, thinks that you're going to get that re-steepening of the yield curve, right? The short end's going to start going down on economic concerns more than anything else. So you buy a massive position there. you get a re-steepening of the yield curve, which is a precursor to the recession, which he must think is on the horizon based on what he said.
Well, I mean, we've already seen a steepening of the yield curve because the short end's only going to come down if the Fed brings it down, right? The steepening's happened on the long end of the curve. And so I think that a macro trader like Stan says, over the next 2 years, I can have a bird in the hand 5%. I'll take that all day long. And that seems to be a very good trade. I think outside of some munis that you see on the longer end and then in the money market world, I think bonds, long duration bonds, you're going to grow more safely. They're a terrible hedge against inflation. So I'll take cash and some munis all day long on the short end. And then equities, longer term, are the best hedge against inflation in the public markets, which is what this show is talking about.
Scott, here's the risk of cash right now and short duration bonds. It's simply reinvestment risk. So anyone who buys a 6 month or a 1 year or a 2 year and getting 5.25%, 5.5% taxable, what's the reinvestment rate going to be if the economy?
All right, so we're drifting a bit lower.
Fed starts cutting. So what I'm trying to do is get out past that and say, look, I'm happy locking in longer term, and I don't want to take the reinvestment risk of shorter term paper.
But there's still, investment advisors, Weiss, who make the argument you're still, if you're a longer term investor, going to be better in equities. You're going to get reasonably good earnings growth over that period of time, reinvestment of dividends and the like, and you're going to do just fine in equities. Now, we're not playing for the 2 month time frame. We're playing for the 2 year time frame at minimum.
I find the ones that come on this show and other shows that say that, they're not the asset allocators. They're only equity. So that's what they're going to say. If you go back to 2022, right, they were saying said in a year we'll be fine. And then, no, in 2 years you'll be fine. 3 years you'll be glad you own this. But, as I've said repeatedly, your return is defined by your point of entry. This is not the time to go into the market.
But you've also made the point on numerous occasions on this show that stocks go up like 80% of the time.
And there's that other 20% where it can be brutal. So I think I think this is a fat pitch of a declining market, frankly. We're seeing it in the data, as Joe pointed out. We're seeing it in monetary policy. We're seeing it in a lack, frankly, of fiscal policy, right? So now is when it's the perfect storm for markets to decline. So look,
which is some would suggest also that there are too many people now on that side of the boat.
But they're not. And just go
even
back.
Stan himself said.
Stan's been negative.
But he made the point that I've been negative. I've got the bond market right. I got all that right, but I got the stock market wrong. Because the stock market still went up in the face of all that.
He got 7 stocks wrong. He's playing the market. Look at all these other stocks. He got it very right. But if he's playing the S&P futures, then of course he got it wrong. But the point is, Scott, is that you don't have to invest. You don't have to every day put money in. You can still make money. I'm comfortable going 2 years out because I think that if that happens with the Fed cutting rates because the economy is going into maybe not a tailspin, but definitely towards a recession, and then the market will move higher at that point.
Hold on real quick. Let's talk about somebody. He knew this was oh boy. Let's talk about somebody who has to be invested. Has to be invested. 100%. Long only your Joe T ETF. Yes. Which you rebalance because it was the end of the quarter, and now we have the moves that you made, which I want to go through them because there are several interesting ones, as there usually are. Many tech moves. Probably saw this coming, at least in some respects. You sold Tesla down 23% in 3 months. Take me to that first.
So that's just a breakdown in momentum. And I think it's a great example of the lack of momentum, as Bryn, you and I talked about before the show. You're going to go through periods. And remember, this is a momentum-based product with a defensive layer being added upon it, which is the quality factor. There's no momentum. There hasn't been.
And the fundamentals broke down too, in addition to the momentum.
There has not been any momentum in the market. So Tesla is a perfect example of where you witnessed that breakdown in momentum. We re-entered that mega cap name in July at a much higher level. And now, because of the breakdown in momentum, we're getting out of here. The rules dictate that that's exactly what we should do. We're still maintaining exposure to a lot of the mega caps that we put back on in April, which have worked out nicely.
Yeah, there were no other mega cap moves. I want to make sure that your viewers are aware
We're
of that.
still holding NVIDIA, we're still holding Microsoft, we're still holding Meta. Those three have worked out incredibly well. We're holding Apple, that's basically a wash. Alphabet, we're down a little, and we haven't been in Amazon since July of 2022.
Okay, so you sold AMD. Yes, down 12% in the last 3 months. Price targets cut today after earnings. Stock did reverse, though, higher, but nonetheless, you obviously feel momentum's lost.
So what's interesting about that is there are, as our good friend, Adam always tells us from Tribarian, there are Adam Parker.
So there's such a good thing. We can't remember.
What's his name again? There's facts.
My best friend, what's his face?
Yeah. There's facts, and then there's feelings. I was going to call him Adam Sandler, by the way. So there's facts and there's feelings. So when you think about AMD, the feeling that I have, I listened to Josh yesterday. I think AMD is going to be fine. I think AMD is going to be.
All right, so we got a dip into. We're still not close enough. I would love to have had this dip into FOMC. I wish it was like 15 minutes till and we had this little dip, the VWAP. We could continue to fade. All right, I just want to take a strangle on this. I'm looking to take a strangle on the S&P, spiders, or the S&P 500. Calls above, about one strike above. Puts, about one strike below. Current price right before the Fed.
There in what clearly is a very strong momentum winner.
You want to touch on any others? I mean, Autodesk, as I said, Gartner,
each one of those, Scott, I think have to prove themselves over the coming quarters. You could define each of them in particular, Cognizant, as having very strong balance sheets. I think it's the quality factor more than the momentum factor. We're studying two factors here.
I thought they had to have both.
Well,
all right, CRISPR showing up on high volume. CRISPR. I've seen that one a couple of times lately. CRISPR, CRSP. High relative volume on CRISPR. CRISPR is showing up 3.45 RVol.
When all the Tesla hullabaloo was going on, and then I think I bought it at 150, 170. I've been sold calls against it.
All right, so CRISPR seeing this big bullish candle. Nice reversal. It's still got to get above the 50-day and the 200-day, so you've got another 6-7 points. If you like mean reversion, it does have high relative volume, so there could be just shorts covering. It's something to watch, though. Keep an eye on it. Mid caps, IJH, mid caps. All right, that doesn't look that great. DR Horton, DHI. The builders had pulled back quite a bit. DHI, builders.
We have in the segments coming up, we're going to go through other sectors because you have a lot, whether it's in energy or healthcare, or in some cases retail too. I also want to be you said on the air.
All right, so DR Horton. Let's take a look at some of these. DR Horton, Toll Brothers. They're all turning. Okay. Beazer Homes. Okay, that's turning. KBH, KB Homes. All right, they're all turning. DHI, KBH, Toll Brothers. PCH. What's Pulte look like? Pulte's got to look the same. Pulte Homes. PHM. GRBK. Green Brick. GRBK. They're all doing the same thing. Okay, so starting to show. Builders.
I disagree with the premise that we should be benchmarked to the S&P, and I'll share with you why. The median market cap of the S&P is 183 billion. The median market cap
DHI. All right, so that looks good. Star Surgical. STAA. STAA. Star Surgical. STAA. 1.5.
Let's take a quick break. We come back. I said Joe's got many moves in many sectors. We're going to go through them. We'll find out how the committee is positioned. We'll do that next.
Star Surgical, bullish base, volume. All right, so everything looking good. A lot of stocks are looking much better. We had 10% of stocks above the 50-day. 90% were below. It's the second time we got down to these levels. And now we're starting to see evidence that that's changing. It's still early. We're only a few days into this bounce, okay? 2 days today, we got a little doji spinning top. We're right below the March support. This is the equal weight index. Number of stocks trading above their 50-day. We got about, 78%? 78% are still below the 50-day, 22% above. Let's just say 20 below, 20 above, 80 below. You get the point. We're starting to come off of an extreme level. Okay. All right, what's AMD doing? AMD just drifting a little bit lower. This is holding up very strong. I like what was said. I don't know the exact number, but from what I understand is Lisa Su mentioned something about $1 billion in additional sales. Yeah.
Family business.
All right, welcome back. I told you we have a lot more moves to go through from Joe's rebalance. Energy. It's tied for the third largest sector holding for you, right? And you're 13%. That's well ahead of the market. Yes. Right. You bought Oxy. Yes. And Pioneer. PXD. Correct.
Adding to the energy exposure, and let's be clear, the overweight exposure within the strategy to energy, but there's no other sector that can compare to that. By the way, the activity in this rebalance was the lowest that we've experienced since January of 2021. There's only 22 names that went in and out. So I've said the other day, less is more. But we really maintained the energy overweight exposure. But I'll say this about energy. This is a prove-it quarter. This quarter, coming up, it has to happen for energy. Or I suspect that you will begin to see the strategy reduce significantly exposure to energy. I think we're at that moment. I think we're at the moment where we've witnessed so far relative underperformance in the energy sector to the other sectors year to date. And now it's time for energy to step forward
and advance from here and begin to outperform.
I mean, it's the worst sector in October, down 6%. You obviously have a ton of exposure there. We get a ton of earnings tomorrow, before the bell, after the bell, even today after the bell with Marathon. What are your thoughts?
So I think from actually a momentum strategy, this is interesting because there's a ton of dispersion of return. So like this year, a Diamondback's up 18%, crushing the S&P, by the way, right? Each Energy Transfer up 10%. You see a lot of individual energy names have done very, very well, with the juxtaposition of a Devon, which I also own, is down 25%. So I think it really matters what you own. We prefer to play RSPG, which is the equal weight. So I don't want to have 40% of the portfolio in Exxon and Chevron. I want to have more smaller and mid-cap exposure, like the Marathons, like the Diamondbacks. And RSPG gives you that. And so you don't have just such a big, I think, headwind of what those two companies do. But I think it's a great momentum strategy going into the end of the year.
We're equal weighted as well. We look at it the same way. It's not as if we have excessive exposure to ExxonMobil and Chevron, which market cap weighted would.
Rich, you have a lot of exposure here. Canadian Natural's your biggest, but you're in Exxon, Chevron. You do have Oxy, the XLE.
I think there's a very bigger picture here in the energy space. First of all, it represents 4.7% of the S&P market value, but it's contributing 11% of the earnings to the S&P. Secondly, in the last 5 years, all the energy companies have really found religion and reduced their exploratory and capex activities in geopolitically unfavorable places. And they brought it home, they conserved cash, they cleaned up their balance sheets. Right now, they are way more shareholder friendly, but also we have companies generating 10, 12, 14% of free cash flow. Look at Shell right now. So Shell got a new CEO January 1. They bought back 10% of the company in the first half of the year, and their free cash flow, not their operating cash flow, is approaching 18% a year now. The one you mentioned, Canadian Natural, it's 10% a year of free cash flow. Exxon, $430 billion company, $46 billion.
All right, so we're getting a little bounce. Watch AMD here.
They're returning it to shareholders through dividends and capex. In an environment where we have 5% structural interest rates, okay? Capital allocations can be very important for companies, and those with free cash flow are the ones that I want to own. Energy is the place.
Okay. Let's get the headlines now with Bertha Coombs. Hi, Bertha.
Hi, Scott. 5 Americans are on the list of foreign passport holders that are expected to pass through the Rafah crossing in Egypt today, according to a list compiled by the Gaza Border Authority and confirmed by NBC News. The State Department said U.S. citizens will be assigned specific departure dates out of Gaza. Jordan's ambassador to Israel is also leaving the region. The country recalled the official to express its disapproval of the war in Gaza. Jordan's deputy prime minister and foreign minister said the ambassador will only return once the war is halted. The statement added that Israel's ambassador will not be allowed to return to Jordan under current conditions. And here at home, a rescue operation is underway in Kentucky after a shuttered coal preparation plant collapsed. Workers were removing machinery to prepare the facility for demolition. At least one man was killed and one is trapped in the accident, missing at this point. The governor declared a state of emergency for rescue efforts.
All right, Bertha, thank you. That's Bertha Coombs. Coming up, a check-in on healthcare. Humana shares pulling back. Weiss is in that one. We just showed Joe T because we're going to get his takes too. You got anything important on there you were looking at? You good? Just fire it. We're back after this.
Alrighty. Here, a little bit of bullish flow. I'm waiting for about 15 minutes, 10 minutes before the FOMC to take a strangle. UPS. All right, so far the flow is bullish going into FOMC. All right, AMD still at the high.
Earnings beat. What's the deal, Weiss? They only affirmed their outlook, reaffirmed it. So is that why there's some disappointment in that name today, down 4%?
Two reasons. That's one, because okay, you had this beat. Why didn't you raise it for the beat? And the other is the loss ratio. They moved that up slightly in the range. I think both are ridiculous candidly. I mean, the stock's at about 16 times, 17 times earnings, which is pretty cheap for this company, pretty dependable. To me, it's fine, but unfortunately, in this market, sort of got to wait around because the market's unrelenting in terms of not just one day down, except for Meta. So I like it. I still think that this is the place to be, both Humana and United Health. United Health's my much bigger position, but this one, I mean, it's painful watching it.
It's been a tread water trade, right? I mean, year to date, it's done nothing. It's not like it's down a lot, but it's just not up.
It's not been a tread the water trade for me. Again, your point of entry defines your return.
Well,
I got it at a pretty good spot here, so I'm pretty happy with it. I'm not selling it. I'll look to probably add when it settles down.
Okay, Bryn, in terms of healthcare, AbbVie, that's your best one, maybe your only one.
Yeah, but I mean, healthcare was my stock summit sector for the year. And so like going into
1237. I'm just scanning through stocks. A little preoccupied. Not much to do at the moment.
Staples and utilities were really expensive relative to their history. So I felt healthcare gave you that like kind of garbage growth at a reasonable price. But you know what? The sector's down 9.5% for the year. It just hasn't delivered as I thought it was. That being said, I'm going to stick with it. I mean, I think AbbVie had numbers last week. They're actually good numbers. But in this market, this quarter, if you miss anything, if there's anything even remotely that the market doesn't like, you're going to get sold off. So I will add to AbbVie at some point this year. But I think as a purchaser of equities, I'm going to wait a little bit longer on that because the chart doesn't look great.
What jumps out to me the most, Joe, in terms of your moves, I'm ready, is that you sold Merck.
Yep.
A long-standing name, personally and in the team.
Yes.
June of 2021, we entered Merck both personally and in the strategy. 74.50 was the entry price, so we're getting out at 102 here, again, personally and in the strategy. The momentum in Merck has broken down, plain and simple. No further explanation needed. The fundamentals are still in place. It's a quality company, great balance sheet, a lot of great.
All right.
But unfortunately, the momentum is broken down. That's the reaction.
Okay, so you bought Lilly, Viva, and Zoetis.
Yes. The interesting one is
Lilly, because of what you got rid of it in a prior rebalance. Now you add it back in this one.
All right. SPY continues to fade S&P. Going into FOMC. All right, wherever we land going into FOMC, I'll be looking to take a strangle $1 out of the money either direction on the SPY. SPY, let's take a look at that. Okay, so VWAP is flattening out going into the Fed. You can see the volumes tapering off. A little bit of selling here. Relative to the morning, though, volumes tapered off quite a bit.
You have to go back in again. You can't sit there and lament the fact that you got out of something, all right? You were in it for in excess of 15 months. You rode it from 290 up to 453 is a great trading lesson there. Now it gaps away from you. You're out of the stock. You don't sit there and go, oh, I feel so bad for myself.
That's pretty funny. Lily. All right, so they're talking Lily gapping up. Okay. No. Okay, so what are they talking about? All right, let's see. NVO, Novo Nordisk, J&J, Merck. All right, Merck's still hanging out here.
Because it went basically flat. So the momentum was incredibly strong from April of 2022 into April of 2023. Then the momentum kind of
low
goes
tick alert
sideways,
-800.
right? And you're responding to the sideways nature of that momentum. That's where you move to the side gap up.
Why the stock gap up?
You don't think that chart looks good, Weiss? It's like fundamentals, like a double.
What were the fundamentals specifically? It was on a drug, right? Okay, right. It's on the way that brought it up. The blues come on a little bit.
Okay, we continue to fade into FOMC. I got to take a 2-minute break. I'll be right back.
What's the multiple? What was the gap price?
445 is where it started, the forecast.
Where's it now?
550.
So how is that the
I see their support maybe down another 10%.
Okay.
Yeah.
And to answer your question, trades at 78 times. It's richly valued. Momentum doesn't take that into account. Quite candidly, we talk about value. We talk about valuation all the time on this show, right?
Right.
Is valuation really the catalyst for where future returns are going to be and where you want to be?
It's not momentum either. It's fundamental.
I didn't ask that question.
Short term.
I didn't ask that question. I said, is valuation? Because you asked me what's
Yes, it's one
valuation.
part of it. Absolutely. It's one part of it. I look at valuation of every stock I buy. Bottoms up fundamental. Charts are fine. I do look at them a little bit, but basically fundamentals will control what I do.
Okay. It's not work in all cases, from my opinion. With valuation of stocks.
All right, VIX spiking back up to 1770. It had been up there north of 20. Interesting, VIX would be below 18 or certainly below 20 going into the Fed. So looks like the markets are positioning for not much fear of the Fed. That said, we should see a pretty decent move, I would think, after the Fed, after Jerome speaks. We're looking for a directional move that plays out over the course of several sessions relative to the pinning action that we've seen over the last few sessions. So looking for a move that plays out over several days. A close above 4,200 implies a test of 4,300 over the next 1 to 2 sessions. We'll give an edge to the bulls. Extending into November OPEX, assuming various key options levels move up to confirm. So that means we need to see calls building at higher strikes. keep in mind that the fuel that would ignite a rally here would be short covering. We have a lot of those puts that are in the money. We would have IB crushing, and therefore we'd see puts lose value if they don't cover. So that could be enough to, after the Fed, to ignite a rally that could last into November OPEX. Now, I'm only looking out 2 or 3 days since it is Wednesday. Looking for a move today that plays out Thursday, Friday. Okay. Sharply lower implied volatility is the Vanna fuel that could move things rapidly higher. Okay. Sharply lower IVs, implied vol, is the Vanna fuel that could move things rapidly higher. But then we'd need to see longer dated, further out in time, October, November, November, December, further out in time, we'd want to see call buyers enter to confirm that the move is set to extend to the upside. So if you're losing sight of what I'm talking about, just go to the Gamma channel and read that first major paragraph. I'm just reciting what Brett was talking about this morning over at Spot Gamma. The concern is that a knee-jerk 1 or 2 day reaction could give way rather quickly. So we need to see those calls. You have to keep saying to yourself, and Money Magic will probably tell you that as well. Over the next couple of days, we want to see, and Mikey will tell you, a heart pumper, we need to see calls at higher strikes. Okay, and we'll keep you up to date on that. So by tomorrow morning, we should have a better understanding if we have more calls building at higher strikes further out in time. Let me just see what Santoli has to say.
Anticipated negative news, I guess that qualifies as good news in this tape. Market's still very much in the prove it zone. We talked near the close last night, Scott, about how we broke this little short-term downtrend. We had some broadening out. Some of the most laggard groups did get some relief, but if all we're doing is working off the oversold levels and then getting put up on a tee to get smacked again, that's the question. Another 1.5% higher on the S&P 500 probably is a hurdle to prove that this could be a decent low for now. I do think it's going to be about whether Powell decides he really wants to work to put that December meeting more live, make it more live, make it more like they still seem vigilant as opposed to the predominant feeling being that the Fed finished in July.
Yeah, because as we showed at the top of our program, 21% chance in December, 28 for January. So the market's all but priced this out.
It has, and
All right, so should Powell have a hawkish tilt, we'd look for a move down to the 4,000s over the next several sessions. So that's why I'm saying, by the way, I might decide to take Friday puts and calls on this triangle rather than 0 day. 0 day would be cheaper, but there's the risk that a bigger move, well, you could always take 0 day. And if the big move continues in one direction or another, you could take a trade tomorrow, the next day. My plan is to take a strangle right before FOMC, puts and calls $1 out of the money on the SPY. Probably 0 day. I could take Friday's puts and calls too. They'll be more expensive, but there's a higher possibility that I'll make more on those. I want to do like a 40 delta. Let me see what those are going for right now. I'm looking for a 40 delta or higher. Okay, SPY. Let me look at that real quick. With implied volatility, what it is, we're currently trading. All right, let me see what 0 day looks like. 0 day. That expires today. Okay, 46 delta is at the money. All right, so if I were to take $1 out of the money, that'd give me a delta 35 on the call side. Let me see the put side. Puts $1 out of the money. 418. Be a minus 40 delta. So the puts are a little bit more expensive. And at $1, let's see. No, that's like $1.50 out of the money. So let me look at 45, 40. All right, puts have a slight edge to them. 419. Okay, so what I want to do is about a 40 delta. Minimum 40 delta. So in other words, I won't take like a 35 or a 30 because it won't move as fast as a 40 or a 45 delta. Okay. You could take a straddle too. I mean, that works on a 0 day. Take a straddle. At the money straddle. Let's see what that looks like. Straddle on the SPY. Okay, currently at this implied volatility, it costs you about $3, $2.90 per contract per straddle. So that's taken at the money put and call. Right now I'm looking at the 420. So it's just a little bit out of the money. That's going for about $3, $2.94. Midpoint's about $2.92. So basically $2.90 to $2.95. $200, $300 per contract. Puts and calls. All right, so total is about $1 each, $1.50 each average. Calls are $1.30, puts are $1.60, so they're pricing a little bit more on the put side because we're just below 420. So yeah, that looks pretty good. Now, Yoda's looking at a strategy where waiting until after the Fed and taking that 235 direction, 235 candle as the direction. That's a good strategy as well. Unity.
See it, touch it every single day. So Costco is a name I've owned since '98. Don't own Nike. Don't own it. Don't own any Nikes. I go to the gym in Nikes every day.
All right. So should Powell have a pretty hawkish tilt, we'd look for a move down to 4,000, somewhere around 4,000 over the next several sessions. If the markets like what Powell says, we could see a 1 or 2 day knee-jerk reaction and higher. So that's why I want to play a straddle or a strangle. A strangle would be less expensive. I'm thinking both sides are going to work. All right, so I'm going to write this down. At the money, straddle versus at the money, strangle. Just want to take a note of what happens, the results. Excuse me. for clearing my throat in your ear. If you want to get a good idea of what to plan for, just check out the Gamma channel. It's updated every day. Today is very important that you understand what could happen in either direction. That's why I'm thinking puts and calls rather than just directional. You could wait until after the markets takes its cue. I would say after 2:35 to 3 o'clock, Powell's going to start speaking. So we'll see what the markets have in store for us. Oops. Press conference with Chair Powell at 2:30. The rate statement will be out at 2. Got an hour to go. A little more than an hour to go. Hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Wednesday, the first trading day of November. This tends to be one of the seasonally stronger months of the year, along with December. So, does Powell spoil a Santa Claus rally, or does he stay pretty much the way he's been? All right. So, the last FOMC, basically the markets have been moving lower since. So I'd like to see this reverse course. July was the high, top of the channel. We looked at this as potentially a channel. Now it's more of a descending or a broadening pattern. Okay, so let me just change this real quick. It's good enough. It's going to be resistance as we come up against it. So we got all three signals turning up now, like we had recently. We had a signal right here, first week of October, that led to a week of upside. All right, so all three are triggering again. Okay, so triggering again. All three of these triggering again. That's what you're looking for. It's the bulls to lose. Basically, it's the bulls to lose. And it all depends on what Powell has to say. All right, it's almost 1 o'clock on the East Coast, the best coast. I got gas yesterday. It was $2.73. 2739. So 274 for unleaded. Filled up the wife's car. 274. What's the gas by you guys? Yeah, a lot of people talking short squeeze. Cassava. Let's see what cassava looks like. Cassava. Daily look pretty good. Daily looks pretty good. Looking for the big short squeeze. A lot of people looking for a short squeeze on this one. Let's see. Rinko daily. Rinko 60-minute. Okay. All right, looks pretty bullish. Amazon. January 140 calls, Amazon.
Canadian Natural Resources, CNQ, 4% dividend yield. All right. Yeah. Well, you finished up. I mean, it was like you got more to say. Like 4%, like there's like yield, and there was more to come. Like yield, oil. Normally, it's like that finish with yield. Like yield, like oil sands company in California, in Canada. Tesla. Sure. Okay.
Yesterday we bought Apollo. We also bought Train Technologies.
Okay. Just to reiterate, right after Chair Powell's done, Jeffrey Gunlock will join me on closing bell. I hope you will as well. I will see you then.
Thank you very much, Scott, and welcome to the exchange. The House has a new speaker, but as the clock is ticking,
Okay. Okay, Kelly Evans. Not really listen to Kelly. All right.
This is event driven, but it doesn't seem like there's a lot of breadth behind this rally because you've got small caps are weak. 4 out of the 11 S&P 500 sectors are still in the red.
Well, I think the volume question is because there's still a lot to go on here, right?
Oh, you mean there's a Fed meeting?
You can trade the market, but this is not a go all in just yet. It's still early in the trading day. Listen, I think a nice relief rally off the numbers from the Treasury gave the market. I mean, if you saw it, bonds, notes all rallied, futures all rallied, everything turned up on that number. Why? Because number one, they didn't shock anybody, and they did a lot of the borrowing is short dated. So they addressed the disruptive bond auctions that we've had by moving some of the numbers up into short term and promising that they may only raise that number one more time in January and then that's it. So they sounded, as much as you can sound responsible when you're borrowing this much money, they sounded responsible in their answer in the numbers. And I think the quick tension that run through the market about this dissipated quickly.
Yeah, that became a non-event after some items were leaked yesterday. Some whispers on that also, but a lot of data to get through. But I think the big stock story of the day, post earnings, is AMD. Let's bring a Jenny Horn, markets correspondent. Jenny, I was looking at this stock. I saw the analyst calls. They're cutting price targets on this one. Weak Q4 guidance, but now the stock is $13 off of its lows post earnings on this one. That's quite a reversal.
It is quite a reversal. This is where I feel like I'm waving the white flag because I would have said that so many other companies that have sold off actually had much better earnings as far as like what they were able to put up. 70 cents a share, that narrowly
According to Impact Russian minutes, this is 2023 liquid natural gas exports at last year levels.
Operating income was around 1.3 billion. For the fourth quarter, though, they do see revenue hitting approximately 6.1 billion, plus or minus around 300 million, which represents growth of around 9% at the midpoint. Although if you take that lower end of that guidance range, it was slightly below what the street had been expecting. In the fourth quarter, though, they said they expect
this stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow futures, forex, and stock instruments. Get a free trial at tickstrike.com.
Embedded market that was part of the CFO of AMD. So it wasn't
All right, so we continue to fade into. Oh, sorry. Continue to fade into FOMC. All right, so 4,200, 42.25. This is not unusual. We've been seeing this move higher. We move higher into resistance and we get rejected. It was 41.65. First it was 41.50, then it was 41.65. Then the past couple of days it was 41.75. We moved above 41.75. We looked to 4,200 as a target. We hit it today. 4,200. We get up to 42.25. We pull back. It just seems like we keep stair stepping higher. Okay, stair stepping higher.
In the grand scheme of the last quarter's trading, really, we're just back to where we were after earnings last time around. So it's been a tough 3 months of trading for AMD investors. The stock largely moved lower. Undoing that all though today it was really, really impressive. Nearly 8% down.
Yeah, I mean, to your point, we're still about 20% off of our 52-week highs. So even with the nice, I mean, nearly 9% move we saw earlier today's session, still though we have faltered quite a bit over the last couple of months as AI enthusiasm seem to fade a little bit here. Our next thing today, though, completely off topic from AMD and all things AI, that is Garmin. We're going from like tech of the future to tech of yesteryear, as I typically do affiliate Garmin with a car and like MapQuest like 10 years ago. But actually, really nice performance from this company this year. They're hitting 52-week highs today.
Oh boy. Oh. Oh, let's see if there's any high relative volume coming into this. ALNY. Let's see what that looks like. ALNY. Was it all Nylum Pharmaceuticals? That's in the toilet. West, WES, Western Midstream Partners. Energy names look pretty good. Seeing 2.25.
Growing at a pretty healthy clip in terms of revenue too, up 12% year over year. Double-digit growth is going to be welcome basically anywhere, particularly if you're selling some sort of discretionary item. I think if you were a Garmin investor and I told you AMD is going to be up 8% tomorrow and you're going to be up more than that, I think you'd be happy and you'd take that without even seeing any results. I think you'd sign up for that.
Let's see. WES. Bullish chart. Our vol is 2.26 times. All right.
Just over 1 billion. It was also ahead of analyst estimates and higher on a year-over-year basis.
All right, we're starting to turn here. Maybe some calls here and some puts at the high. I don't know. That sounds like a good idea. That sounds like a plan. SPY. Maybe some calls here. Looks like the short's covering. Do I want to do Friday? Let's go in between. Let's go Thursday. All right, so where are we? 420. 421 is $1.86. That's a 44 delta. Nah, I'm going to stick to the plan. I'm going to wait until right before the Fed, because this could continue to drop. If I buy calls here, not the best place. Let me see what happens between now and 2 o'clock. Right before 2 o'clock, I'll probably take. I just rationalize this rather than taking 0 day. Maybe I'll go in between Wednesday and Friday. I'll take tomorrow's straddle at the money straddle probably. If you think the market's going to move substantially in both directions, you could do a strangle, $1 out of the money either way, or you could do at the money, same strike, puts and calls. I got to believe we're going to have a pretty decent move today. implied volatility pull back, VIX pull back. So if we get a big spike, if we get a big hawkish tone from Powell, we could see VIX run back up to 2021. We'll have to keep an eye on the yields too. Yields have backed off. U.S. 20-year yield. U.S. 20-year has bounced from the low, so TLT pulled back a little bit, all right, from the high. So TLT is starting to turn the corner, flat VWAP, so I'd expect to see TLT stay in this range between 84.50 and 85, more or less, 50 cents. So if we can get back to 85, 86 post Powell speech, there might be, I want to sell some cover calls on this. Yeah, I was just about to buy some calls. I'm gonna pass. I'm gonna wait. All right, Seagate, STX, STX seeing some volume. All right, Seagate looks pretty interesting. Okay, Western Digital was in, I believe, in the most actives yesterday. Western Digital, that gap down. Oracle's pulled back, right? Oracle looks pretty good. Let's see, when is earnings on Oracle? Oracle.
Margin compression, pricing pressures, trade down effects, and of course, diet drug trends that are
Oracle. If Oracle's earnings are already out of the way, I wouldn't mind taking a trade off the 200-day. Oracle. Okay, earnings on Oracle was September. All right, so that means I need to go check earnings whisper. Okay, Oracle. Okay, we got a nice little rally so far. All right, so Oracle beat expectations. They reported on September 11th. Their next report is December 11th. All right, so they got modest growth, 8.8%. Larry Ellison, he's still at the helm, right? He's still there at Oracle. Oracle looks pretty good. Is the descending pattern, needs to break above the 50 days at 110, so that's only $5 higher. RSI is rising. MACD has turned. This looks pretty good. Oracle looking pretty good. Oracle. Let's see. What did it say? Oracle's R-vol was 1.6 times.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network. No politics, no noise.
Okay, I hope everyone's having a good day.
Anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's time to look at our two upvoted data.
Okay, Tesla back above VWAP. Looking for a move higher in Tesla. Okay, we got the Fed in a few.
Can't help you there. I don't think I've ever actually been with Chili's. Sorry. I mean,
So that's what we need to do next. We need to get Chili's to come to us and like
Fair enough.
get it delivered or something.
I will definitely try it. I'm not opposed to it, but I just can't really weigh in on this one.
Okay, Oracle at the 200-day turning looks good.
Kind of all over the place. We've got a lot going on here, so just bear with me as I try to walk us through it here. Much of the price action was a triangular shape. You can see we've got this blue trend line trending upward here. We had a huge downside excursion, but very rapidly fought our way back above that trend line. We also have a competing trend line starting with.
Okay, we got a lot of midstream energy, oil and gas, midstream oil and gas names. Pretty bullish today. I've seen a number of these. IDEX, that's veterinary sciences, IDEX. Big hammer down at the low. If you like that kind of reversal. IDEX, IDXX. United Therapeutics, UTHR. No, CRISPR 3.4. What's CRISPR doing? We mentioned CRISPR about an hour ago. Okay, still looking bullish. Okay. SPY pushing higher. All right, if you took calls off of that wishy-washy thought process, you're up almost $1 already. So I was second guessing my thought process. I want to take some puts and calls, a strangle or a straddle right before the Fed, thinking that we're going to move in both directions. First direction and then a reversal. And then after 3 o'clock, we should get a better understanding of which direction we're going to be heading.
So all these things are starting to point towards some trend change, moving to more of an upward trend here. But we failed at 2 key resistance points here. We had
all right, so S&P.
Our post-gap earnings move here back in August, and we've also got our purple 250 2-day EMA that we were not able to breach above yet here. So kind of a mixed picture, I guess, but I would say leaning more perhaps toward the bullish side here based on our moving averages changing and this uptrend here. But we really need to take out this level that I mentioned near 35 or so.
Yeah, and it helps that we've moved about 5% to the upside this week, which is a pretty nice move for Bringer International. But now walk us through what you're seeing more as far as momentum and RSI goes.
Momentum is pretty interesting.
I'd love to see us get back up to the high of the day. And I'm just thinking out loud. If we get back up to the high of the day, we're up 0.5% right now. If we get back up there, we'll be up 0.6%, something like that. Maybe twice as many puts. What's the... all right, so we look pretty bullish. Tick cumulative is green. We have fast signal crossing down below the signal line, the fast signal. So looking for a higher low to print on tick cumulative. It's 1-to-1 going into the Fed. That makes sense, 1-to-1. That pretty much sets up what we're talking about, a strangle or a straddle. If it's 1-to-1 up-down volume, that means nobody's winning. At some point, we'll see who gets to win this hand. TLT back to VWAP. Okay, I was looking at some stocks that showing high relative volume. Before, I just mentioned DHI about, half an hour, 45 minutes ago. These builders look pretty strong. Look at the volume. DHI reports in about a week, I believe. Cassava, looking for a big pop on cassava.
So if we are able to make our way up to about 38, that could change things as well. To the downside, this area right here, we've got our trend line and our old lows.
Need a one-way ticket on an airplane.
So all in all, we just saw some Halloween tricks going on with the charts, but we do get your picture. Still overall bullish here, especially considering we're making a nice move today, even though giving up some of that initial strength like Rick laid out. So now trading this name here, Alex, leaning into a more bullish example trade, just given the momentum, the move today. And analysts clearly upbeat about this name following the results.
Yeah, upper end of that value range is around 40 on that chart. Trend was starting to go higher. Momentum was starting to trend higher as well. Seems like a lot of optimism technically. Earnings, and they've got a holiday season, Jenny. Big a fan as you are of Chili's. Maybe some family get together.
Give me a ticket for an airplane. Ain't got time to take a fast train. Lonely days are gone. I'm a going home. My baby, she wrote me a letter. What the hell is he talking about? I'm just sitting here bored, waiting for the Fed. I really should make myself some lunch.
Allows us to benefit in the case that the stock were to move higher, but also there's no earnings to worry about for a quarter. Sometimes these names are the ones that kind of pop up on your radar absent some major surprising news headlines.
AMD, yeah, AMD was a good day.
Breathe a little bit over those next few months. Maybe this rally continues into something more sustainable to test that 40 upper value level. That's the apex of profitability here. But 35-cent debit means $35 in risk. So a relatively lower price trade. Probably what it costs nowadays to go get some baby back ribs at Chili's for the family.
I'm so kidding. I think I might be alone if I ask the rest of my family to go with me to Chili's. But you cannot beat it when you're delayed in the airport. I think that's where my affinity starts. I've been delayed at airports far too often. There's always a Chili's, so I appreciate that. But now our next name today is Craft Times. This is actually a name I will say is so very much loved by my family. My brother is
what's Roku doing? Roku oversold.
Well, we're playing a bit of catch up with our price action as well here. There we go. Okay. Anyway, so trending downward here, we have this blue dashed line here, starting with these highs that we established here, and we did break through that line to the upside. This line became supportive many times here around the points where we kept trending downward here. So, kind of some horizontal levels on the chart looked important to me as well, because we had our best close right there. That was about where we topped out there as well, near 34.55. Since then, we trended downward. We had our yearly low near 30.68. Today is looking a bit of a bright point here. We crossed above our 21-day exponential moving average in yellow there, but we stopped short at a really important point that I thought stood out on the chart.
All right, Cassava Sciences looking for a pop.
That was a low point right here. That was the site of a gap here, and that was some areas where price stopped, around that same point there. So 33.28 is also the site of our shorter term trend line and our 63-day exponential moving average in orange, all coming together at this area just around 33. So even though we are notably up on the day here, we did not breach this important area here. Kind of remains to be seen what will happen with that as we go forward.
Yeah, I think really well put. Now, as far as some momentum behind this trend, what are you looking at?
Well, momentum is improving here. We can see that we've got another trend line going up here. That's something to keep an eye on going forward. That could be a clue that the move is starting to break down. If that trend line on RSI has started to be broken, but we're crossing above the 50 midline today. That separates bearish momentum from bullish momentum. So we've got a strong candle. Actually, I think.
All right, we're still putzing around here. NVIDIA off the highs of the day. Most stocks are off the high of the day.
Is completely encompassing yesterday's real body. So that would be a bullish sign here, and we are also crossing above that 50 midline, like I said. So momentum is looking up a little bit here as well. Once again, though, we really got to cross above that resistance point that I mentioned.
Yeah, I think that's well put here. So now, as far as some key support and resistance, what levels are you keeping on your radar? Also have earnings behind us, which is nice. No major catalysts, but just watching the price here because I feel like we're just losing momentum as the session rolls on.
Yeah, once we add in a couple of the other studies that we follow, our standard deviation channel study.
I don't know if you're listening to this Ameritrade. These people talking Ameritrade, they're just like yapping away. I do that too from time to time, but Excuse me. All right, SPY. We're going to move lower.
Key important point for price to break. If we do get beyond that, these old highs are the place to be on the lookout for next year, 34.50. To the downside, 21-day EMA is the point to hold near 32 or so. And then those old lows, if we were to keep trending even lower, we've got our -1 standard deviation channel just a bit below that point, around the 30 level or so. So we've got some support.
All right, so I'm going to go make something to eat real quick. Doesn't look like the market's going to move much. Probably between 25 handles, 4,200 up to 4,225 for now. Give me 10 minutes. I'll be right back. I'm going to have lunch here. I'm just going to go make something real quick. I'll be right back.
It starts in one day, right? So if there is going to be a trend reversal, you start somewhere, maybe a 3% move to the upside is just that. Now, look, I'm not a big catch-up fan. I'll be honest, I don't like it at all. But I know that many outside the city of Chicago do, and that's the bread and butter when it comes to the high-end side of the business. Of course, you mentioned Kraft and the macaroni and cheese and all the things they got going on as well. This is a staple in the American diet, truly true. And so when we start thinking about this company, it's had a rough couple of years, but if it's going to build on this quarter's optimism, maybe it starts working its way back and undoing that recent downtrend. I looked at a buying of a call, vertical spread, November 17th, so not going out nearly as far in time as we did in our other trade, but up 3% today. If you can just stack a couple more positive days like today together, maybe this one could reach max profitability. Of course, that needs to happen in a hurry as this expires in a relatively short period of time, only about 2 weeks from Friday. So looking at the November 17th, 33.5 call vertical. And what do we know about debit spreads, Jenny? 1/2 the width of the strikes to create a 1-to-1 risk-reward ratio. Check, we got that 75 cents, $75 in risk to make 75. And then the break even, kind of in the ballpark of the current share price. Well, you had mentioned it's 32.40, 32.33 in that range. Well, 32.75 is our break even. Simply add that 75 cents to that long 32 column. Get there. Look, it's not perfect, about 1% away, but it's within that ballpark, especially given the fact that we got a little bit over 2 weeks to expiration. Only got to go up about 1% from here to break even. And then, of course, it goes up another 2% or so, max profit.
And this doesn't even consider the fact that we were up around $33 and was even on the session before giving up some of that strength. So we actually touched levels that would be great for this example trade earlier, even today. It just didn't hold. But we'll leave it there for this segment. Now, coming up next, it's time for FOMO. We are talking now a name that has yet to report its earnings, but they're near to on the horizon. That is PayPal. Shares are down about 1.1% into their next quarterly update today after the close. We'll preview those numbers coming up next.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window. And other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device, just free. Schwab Network.
Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Wrap Up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's time for a look at a developing story with Kevin Green, Senior Markets Correspondent here for the network. So Kevin, I think this story is pretty much developed at this point. Estee Lauder making a brutal move today. I mean, just showing that I believe that we're falling out of favor with some of these makeup trends because you have a name like Alf that's crushing it. Estee Lauder is just not as cool as it used to be, but that's just my own personal take. So walk us through some of these numbers and why we're seeing so much selling today.
Yeah, I think the only thing developing is this downside move that it continues to accelerate over the session. We are down 17%. And that is because of their earnings guidance moving forward. Now, they did have a mixed earnings result here. They actually did beat on the top line. They came in at a profit of 11 cents on an adjusted basis versus the street's estimate of a loss of around 22 cents. But the revenue also did come in a little bit short here. The revenue came in at $3.52 billion. That's actually around a 10.6% decrease on a year-over-year basis, but their guidance moving forward, it did show some caution when it came to their business here. They do expect net sales to decrease by 9 to 11% in Q2 of 2024. They're also expecting organic sales to drop between 8 to 10%. Now, they also have had some issues when it comes to sales, not only just recently, but over the last 2 quarters here.
Okay, I'm here with you guys. I'm just off the mic having lunch. I don't want to chew in your ear. I'll be watching the markets, not doing anything right now, just moving sideways. So once again, I'm thinking about taking an at-the-money straddle, puts and calls on the SPY. Tomorrow's expiration, not today. If you're looking for a cheaper bet, if you will, taking today's puts and calls, a little bit more risky that they don't do what I'm thinking is going to happen. 2 days, 3 days out makes sense. Thursday or Friday is what I'm looking at.
Well, I think the trend right now is the companies that have really good brand recognition and usually have products that price at a premium because of that brand are starting to fall off. I mean, we've seen the same type of scenario here with Nike. Now they're in their last consumer demand, but we did see a little bit of a fall off in the previous quarter. So I think that's really what's happening right now. Consumers are looking for other avenues or other players within the space that might be a little bit lower price and purchasing those goods. So once again, the international travel portion, I think, is actually the most interesting part of this whole story because you can actually look at a chart and look at the international demand or when you're looking at international travel, and it does have a positive correlation. So we are seeing a little bit of a break right now. And that does foretell that maybe we do see a little bit more slowing in the EU as well as in the Asia Pacific markets.
Yeah, I think really well put. And obviously seeing some outside movement today, I think could have guessed this thing moved 17% to the downside. So really, really brutal move today, but great coverage as always. Kevin Green, Senior Markets Correspondent. PayPal had their quarterly numbers, which are expected today after the closing bell, I believe. Now, PayPal, I just tend to associate them with Block. Thank goodness I didn't say Square because that's also, but Block, Square, whatever, PayPal, all operate in this peer-to-peer payment world. However, it's been a battleground all year. I mean, PayPal has been so disappointing. It's kind of amazing to me they don't actually trade more similarly to like a Visa, a MasterCard. They're completely different, but all have consumer exposure. So you think with some of the strength we've seen in like a Visa and an Amex, even their report was really strong That is not at all reflected in PayPal stock price. I mean, they're different companies, of course, but will these earnings be enough to enthuse investors? We'll have to wait and see.
No doubt. I do think the comparison to the company formerly known as Square, now known as Block, makes sense. I think it's common. We think Cash App with Block, we think Venmo with PayPal, really even the traditional legacy PayPal platform is somewhat of a peer-to-peer transfer resource. But I associate PayPal a little bit more with e-commerce, and I associate Block a little bit more with point of sale.
According to State TV, Saudi Arabia's oil revenues at 147 billion riyals in the third quarter of 2023.
Is that the active accounts, it's a healthy number. It's like this 430 million number. It's basically been that for going on a year and a half now, a little bit longer. They're not really growing.
This stream is sponsored by To The Tick. Get free daily pivot points, Fibonacci, and market profile levels by signing up at tothetick.com.
And so it's like, would you rather have both? Yes. But the most important thing is how much money is coming through your platform. And that is something that's growing. They were just to hit the expectations. Looking at, pretty healthy double-digit growth again. Venmo. Again, double-digit growth is expected in terms of payment volume there. So, all things considered, it's on a nice trajectory. But man, was the bar set so high on that pandemic year where this thing just absolutely surged to $310 a share and then nothing but go down.
And you know what's interesting? I don't understand why they saw this lift from the pandemic, right? Because we had to all be forced into contactless payments. But maybe this is just my narrow scope of how I do things. I use PayPal more than ever since the pandemic. I mean, that hasn't waned because it is an incredible tool to use any sort of online checkout. You never need to pull out your credit card. I mean, I don't carry cards on me or cash. I'm ready for the new age of
There's potentially an extra line of security, I think, for some as well. There's payment protections in some cases. So I think those are the reasons why. But I did want to bring some numbers to what you're saying. If we kind of think of peak pandemic time, even into 2021, I mean, there's more transaction volume going through PayPal now by a pretty sizable number. You're talking 20-30% more still now, yet the stock's 1/6 of what it was at its peak.
Yeah, and that's crazy. Perhaps then I guess the argument is the valuation was completely stretched. I mean, we're still seeing people interested in PayPal. We're still seeing people use PayPal. I can attest to that from personal use, but valuation just became outlandish, and I can understand that, I guess, here. Also, what's significant about today's report after closing bell is it's their new CEO, Alex Chris's first earnings call, which is being read as crucial into addressing some of these key business challenges and implementing a turnaround. Again, is a turnaround really necessary? I mean, this is still a company that is growing, just not at the pace it once was. But the Deutsche Bank analysts said they're pretty optimistic. In fact, they expect this company to exceed expectations for their total payment volume and revenue by about 1 to 2 percentage points. Also mentioning that they see now the new CEO should lower margin expansion and earnings expectations into fiscal 2024 to make essential investments for their overall business improvements. So we'll have to see how this earnings call goes. It's an unfortunate position that this new leader is in, just given the fact that we are down about 27% here on the year. But yeah, to your point, Alex, are we just seeing a reset right now in valuation from a pandemic surge?
It's somewhere in between, right? Because I think it's fair to say at this point, a lot of these names had no business being at the prices that they were. I mean, at one point, the stock was trading at its peak 65 times forward earnings. That's just a really, really, meaty valuation, and it's the highest that it was at any point. This was, February 2021, but it's 9 now. It's 9 times forward earnings. That's, historically over the last 5 years, the average for this name in terms of forward earnings is around 30. Well, it's 9 right now, so it's way on the other side of the spectrum now. And you start thinking about that. PayPal's had some very, kind of public struggles. There's been issues around earnings as well, where this thing is disappointed. But from a valuation standpoint, based off of what the estimates that are out there in the street, I mean, this thing is very, very cheap versus itself historically. I don't know that it can't go further down. I don't know that the estimates are right. All I can say is it's on 5-year lows, and by a wide margin, it's on 5-year lows for valuation.
Yeah, and I mean, I think the 3-year chart really perfectly illustrates that, especially because we did just touch into 2-week lows last Friday. So now, as far as how you think about trading this name, I mean, to your point, is it? I mean,
Presently, it looks like we're just going to stick here right around this 4206 level, just jumping around between here and VWAP.
You're probably not alone in that feeling of you're somewhat snake bitten by some of these names, especially a name like PayPal, which has seemingly just found new low after new low at every point along the way. You can understand why someone might be a little bit shy when it comes to pushing the button on this. And so one way to somewhat defend against that is to use a risk-defined strategy as a trade illustration. So that's what we've done here. Still a true earnings trade, just going after this Friday's expiration. Looking at selling a put vertical below the market. Now, it's not going to be outside the expected move, and that's just because we're doing a directional trade. It's going to have to, in that way, is have a trade-off in some way, and that trade-off sets a little bit closer to the money. Now, it is below the year-to-date low and that 5-year low, which is just over 50 a share. So we're selling the 49.47, looking at 60 cents. So what does this do from a risk-reward standpoint? Well, it creates a risk-reward profile that's just a little bit worse than 2-to-1 on it, but it does meet that sort of 30 cents on the dollar of risk loose guideline that we talked about with some of these credit spreads. Very short-term trade that expires on Friday, and of course, just 2 days from now. And that break even is 48.40. You find that by taking the 60 cents away from 49. Now, for context, and you're looking at this name, and like I said, those 5-year lows on this one at 50.25 that was just made on the 27th on Friday. A little bit more cushion even below that, about 4% below that. So no guarantees in this world, of course, but setting up probabilities that in many ways maybe as best as we could, and risk definition in the event that it does continue to disappoint, which of course is absolutely not off the table, particularly for a name that just last quarter gapped down from $73 a share to $64 a share in that 24 hours post the earnings.
No kidding, and I recall some of these wild swing moves, so it's always something to consider here as we approach this earnings with that even there. More promo segment now coming up next. All eyes are on the Fed as they are set to announce their rate decision in just around 20 minutes. So we'll be getting that on our radar as well as what is expected from the Fed coming up next.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions. I watched my mother go through being a single mom. At the end of the day, my mom raised 2 children, including myself. And so once the client knew that she was hurt, we were able to help her. Your clients won't care how much you know until they know how much you care.
Every morning, our analysis is your blueprint for the day. Bonds, stocks across all asset classes. Morning Trade Live on the Schwab Network. Weekdays at 9 a.m. No politics, no noise. Bell to bell and beyond. Available anytime, anywhere, on any device or phone. Schwab Network.
At each and every angle, the whole picture, everything comes tangible on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device, for free. Binge watch the market with the Schwab Network.
your portfolio with the Schwab Network. Schwab Network, available anytime, anywhere on any device, free. Schwab Network.
Welcome back to Next Gen Investing. We're just about 15 minutes away from the Fed announcement at 2 p.m. Eastern and Jerome Powell's press conference.
Microsoft's holding up fairly well. I like the idea of credit spreads, bullish put credit spreads on Microsoft. Showed you one this morning that made 30% in 30 minutes earlier this morning. Very early on, we looked at, it's a small position. I was just testing it to see the waters, test the waters on Microsoft. Wind up getting out plus 30%. So selling the near the money put, buying the out of the money put for a credit. So they give me money to put on the trade, and it works in our favor. Microsoft moves higher. And then you can see at 10:23, right around then is when I started to consider taking the trade for profit. 10:23, that's right in here. So we made it a little bit higher, but then we started fading. So that looked to be a good exit. The exit came because you could see RSI started to drift lower into this strength. So taking that trade off as RSI was starting to diverge from price. You can see price was making new highs. RSI was making higher, lower highs. So taking profits into that. But overall, a pretty good trade on Microsoft. Now, Microsoft on the daily, I like very much for a follow through. So volume is tapering off. We're looking for a breakout. I'd like to see higher volume tomorrow after the Fed for another potential trade or something a little bit longer term.
To control both inflation, but also the amount of credit allocated in the economy. The stimulative program of quantitative easing was a temporary backstop for an economy that was in a better situation because of the pandemic.
The CPI rose substantially in 2022, with the June increase being attributed to a 60% jump in gasoline prices year-over-year. Various measures of U.S. inflation placed it at a 40-year high during the time, as the increases were felt across all categories, not just energy. So once the Fed decided it was time to tame red-hot inflation, it moved with a mighty force.
The story I've been pushing all year is that inflation is here, it's sticky, it's not going away. The Fed is going to stay more aggressive than people think. They've already raised rates 5 times this year. At the beginning of the year, we thought they would raise rates once or twice. We're again saying that the Fed is done. We've been saying that for the last 10 rate hikes.
In March of 2022, almost 2 years to the date of its emergency 50 basis point rate cut, the Fed boosted rates by 25 basis points. In May, Fed officials increased by another 50 basis points. Then for the next 4 meetings, the Fed increased rates by 75 basis points each. The Fed would continue increasing rates until they reached a range of 5.5% at the high end in July, where they remain. The path of future rate hikes remains unclear.
I think the more interesting commentary would be around what are the conditions under which the Fed would be in line with market pricing in starting to cut rates as soon as the second quarter.
The Fed is expected to keep rates the same at its next meeting. And as strong data continues to show a resilient economy, the path could be higher for longer. Renita Young, Schwab Network.
Thanks, Renita. Now coming up next, George Tillis will join us for some last-minute thoughts ahead of the FOMC decision.
out of Chicago. I've been on the road, but now I'm looking for a lot to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
The U.S. interest rate decision, analysts mainly expecting the remainder.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network. Missed out on today's market headlines? Get caught up and catch the wrap at schwabnetwork.com. Available anytime, anywhere, on any device for free.
Stock market remains high, so inflation remains well above the 2% market. Prospect of any change in monetary policy, the rate of increase in certain longer-dated treasury yields.
Welcome back to Next Gen Investing. No under 30 today. We got other things on our mind with the Fed. Just about 10 minutes from now, we'll rate decision, put out the press release, Judy, and then it's like, okay, now we just sit and wait for 30 minutes till like where the real fireworks maybe start.
I know, I feel like it's like the pregame show to the Super Bowl. The Super Bowl doesn't start till 1:30, 2:30 Eastern time, of course, but when Jerome Powell starts speaking, because I think right now markets are largely pricing in the fact they're going to leave things unchanged. Will be interesting to hear the remarks, commentary from Jerome Powell. But here to tell us more on what we can expect, I'd like to welcome in George Tillis, senior markets correspondent for the network. So, George, I mean, I think that things are going to be relatively tame in about 10 minutes, but what are your thoughts for how the markets are going to react in the next, course of the hour?
Well, I mean, I think if you're trading the markets, trying to front run this, best of luck to you, because typically speaking, you see multiple reactions initially, and then of course in the press conference comes about lots of volatility. So I think a lot of people are waiting to see what the announcement is. We do know that there's a high likelihood, close to 100% likelihood, they're not going to raise rates. They're not going to surprise the markets. So I think the questions are really about the language. We didn't have a rate hike last meeting. There was a little bit more of a hawkish tone to it in terms of perhaps raising in December. But just even last meeting, there was no probability increase from using federal funds futures as an indication that they were going to raise in December. And even right now, I went and looked in terms of the probabilities of raising in December. It's only 25%, and it's actually been below 50% since the last meeting. So point is they're not going to raise rates this meeting. They're not going to raise rates apparently next meeting. The questions are: is this more of a hawkish hold, or is it more in line with a more dovish hold? And I think that's really what the markets are going to be looking for. It's really going to be the context of the language versus any action from the Fed.
Yeah, I think I think it's safe to say it'd be a major shock if we get a rate change. Here in about 8 minutes. But the big potential market moving event to me still is and sort of the elephant in the room, if you will, George, is their dots suggest 25 basis points more by year end. The market doesn't have that priced in. Now, granted, they've said that's not like a plan. It's not set in stone. They're going to change as things change from data perspectives. But has enough transpired from either geopolitical tensions flaring up or the trajectory of inflation to merit that pause? Or is the Fed sending the wrong message then if they do kind of throw in the towel now?
Well, I don't think they're going to say we're throwing in the towel. I think, if you just look at inflation, core inflation is still around 4.1% because, rents and equivalents take time to renegotiate new contracts and so forth, or lease agreements. I mean, headline inflation is below 4%, but nonetheless, both of these numbers are above their target of 2%. So they have to have interest rates higher than inflation to be restrictive. So one would say that maybe now they are restrictive, considering we're about 1.5% above headline inflation. Now, some would say maybe it's not enough. Some would say it's enough. So I think right now we're on the fence in terms of trying to see whether or not what we have right now in terms of the federal funds rate is sufficient to actually cause inflation to slowly go down. I mean, it's going to take time. I mean, it's not going to come down soon. It grows rather quickly, but it is going to take some time for it to normalize. So we may end up seeing just rates stay where they're at for quite some time. And even right now, going out to next year, there's not actually anything greater than a 50% probability of a rate cut until June. So maybe the markets would appreciate if the rates just stay where they're at for a while. And maybe that's what will happen. And maybe, again, the markets will adjust around those rates, and we'll see just the manifestation of real earnings and real economic growth play out the next
All right, so going nowhere, just sitting here, pretty much what's expected between 42.04 and 42.12. About $8, 8 points on the futures, just chopping around. Okay, the large part of what I'm thinking, or the bigger part of what I'm thinking, is that a lot of stocks, a lot of sectors are doing the same thing. You see Roku here, Roku turning, stochastic about the trigger. Okay, there's so many stocks oversold, and it's the bulls to lose. It all depends on how they interpret and trade Powell's comments. You got these three boxes here lining up with stochastics 1, 2, 3. Stochastics triggering on the New York FANG index, those top 10 stocks. These 10 stocks that we trade on a regular basis. What's he talking about?
With the release last time, it was strengthening the dollar and weakening the S&P as well. Attention was
as a hard worker.
Used to do side jobs, as the derivatives say,
charge
and some earnings now is widely expected by the markets. As mentioned earlier, the CME Fed Watch Tool currently has around a 98.3% chance of no change seen by market participants at this meeting. So attention likely to turn to the rate statement as to whether the Fed will comment on the effects of geopolitical issues on the economy, alongside how strong USG, the US GDP, and the current inflation situation is with respect to the FOMC policy and the potential soft landing scenario.
All right, we got seconds, 2 minutes to go. 2-minute warning, 2-minute warning. All right. All right, so I'm taking the 420 straddle for Thursday. 420 straddle. SPY. Could go either way. Okay, we got less than a minute to go. All right, I'm filled. All right, so 420 straddle. 420 straddle. All right, 293 was filled. All right, filled. Let's go, LETSGO. No change. Here we go.
Remains uncertain. It says inflation remains elevated and the policy setting committee.
High tick alert plus 800.
Target. Tighter financial conditions likely to weigh. It says a policy setting. It says economic activity, apologies, expanded at a strong pace in Q3. Job gains moderated but remained strong. So in determining
Here we go.
additional policy firming may be appropriate.
All right, so the calls need to outweigh the puts. If we start to rip higher, oh, sorry about that. If they start to rip higher, I will take the puts off.
And that they will continue bond holding reductions as previously planned.
Okay, initial
Some key points from the
pop.
Fed statement there. So they note that tighter financial and credit conditions are to weigh on the economy and repeats that it will assess the extent of additional policy firming. And so looking to the markets here, a general whipsaw in the S&P 500, just seeing a bit of movement to the downside now, and also a bit of weakness in the dollar as well.
All right, dollar weakness.
VIX remaining unchanged around 17.47.
Sorry about that.
As well, U.S. short-term interest rate futures add to earlier gains as traders bet that Fed rate hikes have ended. So again, U.S. short-term interest rate futures add to their earlier gains as market participants bet that the Fed rate hikes have now ended. Treasuries extending their gains as well following the FOMC decision. A dollar are raising gains after the Fed policy as well. Has quickly backtracked that, however.
DXY, dollar, it's okay. US 20-year yield. Okay, looking for a fade. Going to take a few minutes for the markets to give us a direction, most likely.
Lower by 10 basis points on the day following the Fed decision.
U.S. short-term interest rate futures add to earlier gains as traders bet the Fed rate hikes have ended. I don't know who wrote that in the news, but traders betting the Fed rate hikes have ended. Sufficiently restrictive. Just keeping them higher for longer.
S&P lost up around 0.5%, and Nasdaq lost up around 0.7% as the Fed leaves rates unchanged as expected.
All right, we're up 18 handles on SPY. 20-year yield jumping around TLT. Okay, off the best levels of the session. TLT on a buy signal. Looks like we could push back above VWAP here. TLT. Yeah, agree with you a ton. Money Magic, agree. Traders of short-term U.S. interest rates add to bets that the Feds will start cutting rates by June 2024. So that's next year. Okay, just kind of sitting here doing nothing. The killing premium. That's why I wanted to take tomorrow's. I took tomorrow's puts and calls. Straddle. Come on, SPY. Make your mind up. Let's go, LETSGO. Okay. What are they doing? All quiet on the Western Front. All quiet. Fed repeats that inflation is still elevated. Well, I tell you what, gas has gone from $4 a gallon down to $2.74. Core inflation, the things that, food and gas have been coming down. Eggs went from $8.99 per 12 per dozen, $8.99. I think we hit a peak at $9.99. That was to come back down to $5.99. So Cal-Maine, big supplier on the East Coast of eggs, organic and otherwise. Coffee, there was a point where my Dunkin' Donuts 20-ounce bag of coffee, ground coffee, was $17.99. I think was the peak. It's back down to $11.99.
The Treasury yield curve last at minus 20 basis points after reaching minus 24 basis points after the Fed statement.
So that's come in quite a bit. Food, though, I do notice that food still generally is pretty expensive. I go to the store. I'm sure all of you have experienced this too. You get a dozen items and it's 85, 90 bucks, Get a couple of Haagen-Dazs ice creams, some milk, organic milk, some eggs, maybe hamburgers for the kids. You come out of the store, it's 75, 80 bucks every time you go in there or more. Good reason to shop at Costco if you don't already have a membership. You get more value. And you have organic options, whereas I don't know how many organic options you have in a Walmart. But I check out what people are buying when they're in Walmart. Whenever I go in there to get whatever, bird seed, cheap for the birds in the neighborhood. Or, personal toiletries. I'll definitely go into Walmart for that. But Costco, I'm always checking out between Walmart, Costco, always checking to see what people are buying. Costco, you get the best deal for your money. All right. So speaking of Costco and Target, Walmart, let's take a look at their charts real quick. Don't see elevated volume, but okay. Let me just look at New York FANG Index. A little bit of a wick on the top of this candle. I'd like to see us close at the top of the range. I'm looking for the big move. Looking for the big move. Yeah. Yeah, exactly, Grover. Exactly. Waiting for the 230. Not much of a reaction here. Kind of muted. All right, so if we had the Fed and we're up here in the red zone, stochastics in the red zone, I'd be more concerned than where we are now, which is after a 2-week down, a 2-week move back to the lower part of this wedge or channel. I'd be more concerned. RSIs had a chance to reset, moving higher. A lot of stocks look very similar with stochastics oversold. I ran a scan. Let me do that again. Let me run a scan right now of, actually, I don't need to. Let me just go here. I did run a scan on, was it Sunday? Stochastic pop. That looks for stocks that are oversold. Stochastics oversold. Let me go to a candle glance. Stochastics. And what just happened? All right, so stochastics 14.1. All right, so you can see most of these are oversold. Amazon's now following through. Booz Allen Hamilton. Okay, the reversal on Friday. Follow through this week, Monday, Tuesday, Wednesday. Booz Allen Hamilton. Okay, nice turn. Volume picking up. MACD stochastics. Many stocks look very similar to this. So if your stock that you're interested in looks like this one, look for the follow through. What's Chewy doing? That was one that we were looking at. Astro was looking at this yesterday. Chewy. Okay. Higher highs, higher lows. Every day is not going to be an up day. Sorry to say. I don't think anybody in the trading room expects stocks to be up every single day. Occasionally, you're going to have a little two-step, Texas two-step. 1 step forward, 2 steps back. Okay, so we got 1 step back. Looking for a follow-through this week. You can see the base, volume by price. You can tell what we've come out of. We've come out of the markdown phase. Price action, when it starts moving sideways, is when you start getting prepared for a move. Price action, moving averages move sideways. Volume picks up. That's the first thing that we were looking for. Volume. Accumulation phase, phase 1 starting. Now the next phase is phase 2. Okay. And we'll look for that to show up on Chewy. And the moving averages turn up and to the right, get above the 50-day. Price gets above the 50-day. Higher highs, higher lows over each day and weekly on the progress, becoming more bullish. So we're looking for that to follow through. Still has room, still has work to do. Look at this big Kirby, though, overhead. Once we get going on Chewy, we could see 28 pretty fast. 28 to 30. Top of this, the ceiling up here, those histogram bars. Looking for price to motor through here. So you got to be patient. Let's see some other stocks that fit this billing. The builders have been building. No pun intended. Stochastics turning. There's that signature move that we're looking for. Last time this happened, MACD followed, volume picked up. First week of October, what happened? We had a 4-day run. Okay, we got a 3-day run so far, but stochastics just triggered. So we'll see how far this goes. MACD's turning and volume picking up. And most of the builders are turning. This is Toll Brothers DHI with high relative volume today. DHI. DR Horton. Nice turn. Look at stochastics. There's your signature. RSIs through 50. Volume picking up. That's institutions. So while it's never a guarantee, that's pretty good. Pretty good that they have your back, basically. What's IBM doing? I haven't talked about IBM in a while. IBM. Okay, back above 50 day. Look where IBM was a week ago. Look at stochastics turning. MACD turn right behind it. Volume picked up. And where did price go? Gapped up on earnings. 142, 143, and following through now. What about Amazon? Amazon, okay, was oversold going into earnings. Look at the volume. RSI above 50, price above the 50-day. Now I'm getting a bit more excited about Amazon. I have the 140 call for January, so we'll just keep hold on to Amazon. Looking for this to continue. Again, I have the January 140. Last I looked, it was a 45 delta, I believe. Amazon. Okay. Amazon. Amazon, that is a 46 delta. Okay, so 46 delta. Pretty soon it'll be in the money. No reason to sell it. Hasn't done anything stupid. So to clarify what I mean by the statement does something stupid, that means you have a nice bullish price action. All of a sudden you get a reversal. RSI turns back down. Volume picks up. Bearish volume. And we start to lose moving averages. That's something stupid. Right now, this is doing really well. Only 3 days after earnings, 4 days after earnings. And a lot of good things said about Amazon. Markets liked it. Volume picked up. Okay, the weekly. We want price to be above the 10 EMA weekly. It is. Okay, speaking of 10 EMA weekly, what's TRBCX? Not quite back above. I think it stopped out. If you recall, TRBCX, I said that I would stop out if we close below 134. We did that last week at 134, 133 and 50, 133 and 70, something like that. I got stopped out. Took half a position off that I started over here. Okay. About 10 weeks ago, I started half. I had a full position back there in December, made 45%, pulled back just prior to the last debt negotiation. We took half off just in case, and I added it back about 10, 12 weeks ago. We came back, so that was right around 136, 137, and I got stopped out a few points below that. So TRBCX, T. Rowe Price, blue chip growth, this needs to get back above the 10 EMA and turn, get back above 145. I'm looking for it to move back to 52-week highs at 175, 177, something like that by year end. Yeah, I'm same thing, Novissimo. I buy a lot from Costco. Yeah, I meant to go ahead and take a look at Costco. Costco, our weekly looks good above the 10 EMA now. So it looks like we'll grind a bit higher. Costco. Okay, back above the 100 period, right at the 50-day right now. Stochastics just now turning. There's your signature right there. Stochastics. MACD will follow. Volume is what we need to see next. Okay, MACD and volume is what we need to see next. RSI, about to get through 50. BJ's, a friend of mine is an executive VP over at BJ's, and they decided to break ground. It hasn't broken ground yet, but they decided to buy property here in Myrtle Beach, about 7 to 8 minutes from my house. Costco's about 15 minutes, but they're going anywhere Costco Anywhere there's a Costco, BJ's is sure to follow, at least on the East Coast. I think they're as far west as Tennessee. I'm not sure where else they are beyond Tennessee, that area. But BJ is another one. This is holding up very well. This is one that would be a good candidate for perhaps a butterfly. Sell 2 of the 69 calls. Buy a 70 and a 68 call. Look for price to stay in this range and collect the credit. All right, so Jay Powell will be speaking shortly. All right, not much movement. I guess we're just waiting for Powell to speak. All right, what's the dollar doing? Dollar. All right, VIX is moderating at this area. The dollar's at 107. The dollar spiked to 107.03, pull back. 10 years at 4.79%. That was at 4.9 this morning, so it's down 11 basis points. VIX chopping around needs that. We need VIX to drop off. Oil is dropping off. It's at $80.30, $80.70 per barrel, crude oil. VIX, I have 1755. VIX, 1755. VIX, 1755. Okay. All righty. Okay, TLT, Amazon. All right, SPY's starting to move. S&P. All right. All right, S&P. We talked the dollar. We talked VIX. VIX moving back. Crude oil, USO dropping. The US 10-year yield moderating. Still pretty elevated for the most part. All right, S&P watching for a follow through. We should get a more pronounced move. I would think, when Chair Powell speaks. So that's at 2:30. Got 7 minutes to go. We'll see what the markets do. Okay, Microsoft. I was going to say Microsoft, very bullish look to Microsoft. Okay, it did pull back a little bit from the high of the day. Okay, now it's starting to turn. Looks like A, B, C, looking for Microsoft to follow through. A couple of different ways to trade this. You could sell a bullish put credit spread by selling a near the money put, buying out of the money, one strike below, look for prices to move away, or you could do buy rate. You could buy shares and sell covered calls near the money, about 345, or you could do straight calls or a call spread. Regardless, it looks like Microsoft is going to continue along this path. Look at the volume. Microsoft starting with subscription service to its chat Copilot. I guess that's what they call it. Part of 365. Microsoft. All right, looking for a move higher. Looking for Microsoft. I favor the put credit spread on Microsoft. Sell something like the 342.50 for Friday. Buy the 340. Your risk max loss is $71. Maximum gains $179. Yeah, the VIX, the fact that the VIX is below 18 says a lot about the markets. It says that very little, in the way of expectations, looking for very little downside. Fed 98.3, I think it was, 98.3 chance that would stay unchanged. That's what we got. Right now, we're just waiting for markets to continue. All right, Microsoft. Apple going. Apple's going. All right, so Powell's been saying lately that rates have been sufficiently restrictive. Yeah, we got something like 10 rate hikes, right, or more. And as Jay Powell keeps saying, rates are sufficiently restrictive, so keep them higher longer. So I'm listening for that, those comments to, oh, he's talking. Okay. Let's see. All right, let me put Jay Powell on here.
Is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has
High tech alert.
in the stance of monetary policy.
All right, getting the call side now.
Percentage points, and have continued to reduce our securities holdings at a brisk pace. The stance of policy is restrictive, meaning that tight policy is putting downward pressure on economic activity and inflation, and the full effects of our tightening have yet to be felt.
Okay, VIX dropping off here. Wow, that was a pretty big drop in VIX.
Continue to reduce our securities holdings. Given how far we have come, along with the uncertainties and risks we face, the committee is proceeding carefully.
Tiptoe through the tulips.
Policy will remain restrictive based on the totality of the incoming data, the evolving outlook, and the balance of risks. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a strong pace and well above earlier expectations. In the third quarter, real GDP is estimated to have risen an outsized annual rate of 4.9%, boosted by a surge in consumer spending. After picking up somewhat over the summer, activity in the housing sector has flattened out and remains well below levels of a year ago, largely reflecting higher mortgage rates. Higher interest rates also appear to be weighing on business fixed investment. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 266,000 jobs per month, a strong pace
All right, there you go.
Below that seen earlier in the year. The unemployment rate remains low at 3.8%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up since late last year, particularly for individuals aged 25 to 54 years. And immigration has rebounded to pre-pandemic levels. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. Inflation remains well above our longer run goal of 2%. Total PCE prices rose 3.4% over the 12 months ending in September. Excluding the volatile food and energy categories, core PCE prices rose 3.7%. Inflation has moderated since the middle of last year, and readings over
Nice move on SPY.
But a few months of good data are only the beginning of what it will take to build confidence that inflation is moving down sustainably toward our goal. The process of getting
He doesn't sound very hawkish.
has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in.
Don't forget, shorts will need to cover as we remove higher monetized puts. That helps us to rise.
The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by
All right, here we go.
percentage points.
Nice move.
And we have decreased our securities holdings by more than $1 billion. Our restrictive stance of monetary policy is putting.
All right, all the FANG stocks are going vertical.
The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue.
Okay, they just sold some into that strength.
Our securities holdings. We are committed.
VIX still dropping. All the FANG stocks are rising.
To bring inflation sustainably down to 2% over time, and to keeping policy restrictive until we are confident that inflation is on a path to that objective. We are attentive to recent data showing the resilience.
Okay, we got rejected here once before today.
Evidence of growth
Meta, follow through.
Or that tightness in the labor market is no longer easing, could put further progress on inflation at risk, and could warrant further tightening of monetary policy. Financial conditions have tightened significantly in recent months, driven by higher, longer-term bond yields, among other factors. Because persistent changes in financial conditions can have implications for the path of monetary policy, we monitor financial developments closely. In light of the uncertainties and risks and how far we have come, the committee is proceeding carefully. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook and for economic activity and inflation, as well as the balance of risks. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below potential growth and some softening of labor.
I don't like the way that sounds.
Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission.
I don't see they have much of a choice. And with all the printing of the money, with all the money printing, with all that money printing, I can't imagine how they can do anything other than what they're doing. If you heard Druckenmiller this morning, he sounded very sobering. Okay. Okay, starting to pull back now. All right.
Low tick alert minus 800.
Okay, big drop here. Big drop. All right, so we got both directions on SPY so far. Wow, got the high road. Let's see if they take the low road.
Extreme low tick alert.
Okay, dropping off. Pretty nice reversal there.
Low tick alert minus 800.
Let's see what the U.S. 10-year looks like. Back up to the morning or the afternoon highs. I'm looking for the direction after all of this is done, after he finishes talking. I'm looking for direction. So here's the 10-year. The highs over here earlier this morning at 4.9%. We're down here at 4.82%. All right, now it's going to move in the other direction.
Low tick alert minus 800.
All right, so we're just sitting here with some wicks underneath these 2-minute, 5-minute candles. Nothing doing. Okay, all the FANG stocks starting to show some short covering. All right, FANGs are starting to see some short covering. Okay, everything is starting to see some short covering. These people in this Fed meeting or in the audience asking the Fed, they look really, what's the right word? They look like they'd be a lot of fun to be with at a party. uh, they all have that look, doing their job. What's he talking about? I have no idea. Just waiting for a clear direction out of this Fed meeting. Right now, it's just chop, no direction. We just have 1-to-1, up down volumes 1-to-1, and we have tick cumulative still managing to stay green. So that tells me to go look. Tick cumulative is still green. That's telling me to go look at the S&P 500 number of stocks above the 50-day, number of stocks above the 200-day. Okay, they're still rising. Okay, still rising. Okay, that's good. That's good. Now, tomorrow we want to see these up near 25%. 25% on the 50-day and say 34% on the 200-day. If these two keep rising with CCI, that's bullish for a follow-through. We know that the S&P 500 has stochastics firing. Okay, it's been firing along with the New York FANG index. So you guys are already aware of this. Just to reiterate, the S&P, okay, stochastics has fired. Now, the most recent stochastic bullish signal led to a week of upside. 1, 2, 3, 4 candles, and in the 5th candle, we just kind of took it easy. Today is day 3. We got the 200-day, which we need to get above. 200-day is right there at 42.43, I think it was. 42.43. So we need to get above 42.43 and 42.50. 42.43 and 42.50. Let's just say 42.50. We get above 42.50 this week, maybe tomorrow. We would look for this condition to continue. MACD is just about ready to cross. So momentum is clearly the bulls to lose. The bears are losing it. The volume's picking up. Okay, that looks pretty good. We got pretty close to JP Morgan's long put in this collar. Okay, we're still in the descending pattern. RSI is rising. Everything is lining up for follow through. Now, we could be disappointed. Tomorrow, they could come in and start selling this just shy. Maybe we hit the 200-day and we roll over. 200 days is a big deal. We're below it. We want to get it back above it. Everything says we should if this keeps up. Let's look at the advanced decline. Advanced decline. All right, back to 0. All right, this was down here near minus 30. Small caps were minus 30. Mid caps were minus 30. S&P was minus 28. And NASDAQ was minus 28. We're back to 0. So we pushed in the opposite direction. Let's look at NIMO. NAMO. Okay. What I'm interested in is the black line. The black line is telling me higher highs, higher lows. Momentum is with the bulls. We got blue elder sticks. That looks good. We'd like to see NICE turning up. It's got a little hook. Let's see if we can get that to follow through. All right. So this workflow that I'm going through right now is where I'm looking for discrepancies or confirmation. So right now, we want to see junk bonds and high risky assets. We want to see bullish. Junk bonds will lead the markets most of the time. Okay, we've been staying pretty bullish on junk bonds. We're making higher lows and higher highs. We made a higher high yesterday, looking for a follow through. Looking for IBB and IWM to turn higher. IBB looking pretty good. IBB is the big cap biotech. IWM, small caps. We want this risky asset to turn up too, and we want Bitcoin to continue higher. That's a risky asset. We added that to our signals. We got advanced decline turning back above its 10-period moving average. So we got a crossover, got a high tech alert, looking for better. And we got the 10-year, the lower panel is the 10-year, 4.8% turning down. All of these indicate that we should see a follow through. There you go. Nice pop there. So you should have got both directions. You should have gotten both directions on your SPY, the puts and the calls. working in either direction. So that worked out pretty well. The at the money performing better. I didn't look at the strangle dollar out of the money either way. That probably worked too, though. FANG stocks are all turned up, moving higher. Netflix is running. Netflix is going. Netflix going. Um, all right, extreme high tech back up to the highs. We got to get through this high from this morning. The high this morning was 42.30-ish. Okay, all the FANGs are going. Okay, all the FANG stocks turning up, folks. FANG turning up. Okay, I want to see these follow through. Netflix is running. Netflix running. Apple going. Tesla. Okay, Microsoft go, baby. Microsoft go. Meta. All right, so that's a pretty good sign. Powell. All right, Powell is saying the Fed is seeing the effects of the 2022 hikes now. Caterpillar. Okay, nice. All right, so we're trying to get through the highs that we just got rejected at, and it looks like we might continue. All right, all the FANG stocks, a little profit taking there on that little pop.
High tick alert plus 800. Extreme high tick alert.
Boom. Hope everyone's having a good day. I'm your host, Cousin Benny, coming to you from theclosingprint.com at straight up 3 o'clock p.m. on the East Coast, the best coast of most. It is the first FOMC. There it goes. Boom. Holy shizzle. There goes the Fed. There it goes. Okay, nice job there, folks. All right, you should have been able to get out of the put side of that trade too, on that dip.
Extreme high tick alert.
S&P. Nice.
Extreme high tilt alert.
Oh, there we go. There we go. That's nice. Go, baby. Yeah, that's what I'm talking about. All right, this should carry over a couple of days if we continue this. All right, looking good. VIX still dropping off. Wow, look at this move. Very nice.
Extreme high tilt alert.
A nice little pop there. Good job. See how far we go with this. All right, so CTSH cognizant. Let's see what that looks like. See an above average volume. CTSH. All right, CTH looks good.
High took alert plus 800.
There we go. There's Woody. All right. Looking for more. The longer he speaks, the more he could say something that he shouldn't say. The longer he speaks.
High took alert plus 800.
Oh boy, look at this move. Shizzle me timber. There we go. That's what I'm looking for. Okay. All right, you should have made a profit in both directions on SPY. On that dip, you could have gotten out with a nice little profit. Now this thing is just ripping. We're looking for a follow through. A couple of days, we know. This is just puts monetizing, mostly, and shorts covering.
Extreme high took alert. High took alert plus 800.
All right, S&P. Now that just blasted right through. Nice. Come on, keep going. Keep going. Okay, looking good. Don't forget, don't get so hypnotized by SPY and the S&P that you forget to take profits off on some positions that may be going in the money or where you'd like to exit some into strength, maybe reduce your exposure. We should start to see over this next couple of days, I would think that we'll see stochastics continue the ramp higher. MACD will cross probably Thursday or Friday on the S&P 500. RSI will continue. And we should see developments that are more bullish. Okay, so look at the SPY. SPY is already above the 200-day. Okay. Okay. Right here, we're back above the 200-day. Okay, S&P, spiders back above the 200-day. Yes, it is. Okay. Mm-hmm. All right, so looking much better. All righty, you guys should be pretty happy with today's outstanding results. All right, hope everyone's having a good day. Could have been a lot worse. Fed could have came out and been very, very hawkish. Thankfully, he isn't. All right, let's go one more time, SPY. Let's get a little bit higher. Take some profits into strength. Okay, we got plenty of time to run this sucker. Okay, go, baby, go, 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 go. Go already. Shake and bake. Ricky Bobby. Ricky Bobby says shake and bake. Whoa, look at this friggin' move. Yep. Nice move. All right, looking good. Looking really good. Wow, those calls blew up. Those calls really blew up. Nice. 100% on those. Okay, VIX still dropping off. All right.
High tick alert plus 800.
Should keep going. Should keep going.
Extreme high tick alert.
No. Don't do that. Don't do that. Don't do that. No. All right, somebody taking some profits off there. All right, maybe take some profits off. Scale out. All right, I would take some of those buy calls off. You should have done well on that trade in both directions. All right, been a pretty good day. I have to say, really good day.
High tick alert plus 800.
All right, so we're going to continue to move higher here. Looking really good. All right, nice move. All right, so you guys should be pretty happy at this point. Should be happy. We got the move down to take your puts out. They got the move up.
High tick alert plus 800.
Oh, holy crap. All right, looks like we're going to keep going here. Looks like we're going to keep going.
High tick alert.
Okay. Oh. Friday. Amazon continues. Looking good.
Extreme high tick alert.
All right. Okay. Super micro. Let's see if there's any above average volume into the close. Molson Coors, another day of above average volume. Molson Coors. Okay. Turning the corner. Day 2. Molson Coors. All right. All right. So that's been a pretty good day. Let's see. Super micro. Could go either way, right? A little profit taking at the highs. VIX is trying to turn. All right, Tesla going. Tesla. All right, looking for more Rosanna Dana. What's AMD doing? I'd really like to buy some AMD. Maybe tomorrow. Wow, what a freaking day on AMD. Nearly 10%. Still going. Nice. AMD. All right. ARM Holdings, looking for that to follow through. Okay, TLT, looking good. TLT. Do I want to sell covered calls again? Let's see. What did January's look like? Okay, we're right at 85 right now, TLT. I could sell the TLT January 86 for $3. That brings my cost basis down again. That would be down below 79 because I've been selling covered calls against my TLT. Okay, I'm probably going to do that. Let's see if we can pop here. TLT. Okay, TLT. All right, so we're pushing now. I'm going to try to get $3 for these. TLT. TLT, I want to sell the 86 call for $3 or better. Let me put $3 in here. Sell to open the January 86 call for a limit price. See if I can get $3. Okay. All right, so I'm going to sell the 86. That'll bring, this will be my second trade. That'll bring my cost basis down.
High tick alert plus 800.
To 79. Now remember, the first TLT trade I did, I only got like $1.50. I originally sold the calls for like 3, I believe, 3 something, but I only got half of what I was looking for. That's okay. I got $1.50 and I'm still holding the shares. Each time I'm doing that, it's like the stock is moving, but it's not, in a sense. In that, even though TLT is not moving, I've sold covered calls. I will, if I can get filled here at 3. If I can get filled at 3 for the January 86, that will bring my cost basis down. If I got the whole $1.50 plus $3, if I got the whole $4.50, that would bring my cost basis down below 79. Okay, so I originally got in at 83 and change. First time, $1.50, so that brings my cost basis down. Currently, my cost basis is $81.50. Okay, $81.50, and if I add another $1.50 or $3 to that, that'll bring my cost basis down even more, and still hold on to bonds right now. So I'm still waiting for the bonds to break out. They haven't broken higher yet. You should be able to understand. It's pretty straightforward. Look at, remember we were talking about the 10-year yield that we needed to see this kind of action. We saw this over here previously at 43.62 when we pulled back. Now we need to see something similar. A lot of people are betting on options bets on shorts on this. All right, so SPY pulling back a bit. Amazon still going. Amazon's going strong. All right, let's see. Western Digital, WDC. Okay, that looks good. CVS. Nice, okay. TT, Train. That's one that friend I was looking at. Train. The profit taking. Look at TT. Train. What a freaking day on train. Garmin. GRMN. Garmin. Big move on Garmin. Groupon. Moving higher. Bido. Okay, what is Bitcoin doing? I see Bido's on the move here. What's going on? Okay. All right, so Garmin had a good day today. Wow, Garmin. All right, Roku. Roku. That's a wrap. I got Roku earnings out tonight. Roku, let's see what they do. Hope everyone had a good day today. Looking for SPY, S&P to continue into tomorrow, maybe next, maybe into Friday. Okay. All right, folks. Let's see what Roku does after hours. Looking for Roku to report. Qualcomm with a beat. Qualcomm with a beat. Nice. Nice, Qualcomm. Okay, folks. I'm out of here. Have a great evening, everyone. Take care. We'll see you in the morning. Ciao.